sit in that seat? All right. All right, here you go. Okay. All right. Are you ready to go? Hey, how are you? Good. Did you win all the games? I did, actually. Yeah. I knew it. I play tennis, so it just like translates so well. Hey, Demont. Jason Demont. Can you help them, please? It's just the smartest guy to do this. Good morning, everyone. How was ping pong last night? Was there an actual tournament, or was that like Sam and Jason are really that was impressive, you guys. I didn't lose. Anyway, good morning. Welcome to day 2 of Founder University. We have a jam-packed day for you, and we're really excited. In the morning, we're going to have 2 talks before the pitches start. So Sam August, who is our president and Founder University alum, is going to give a talk about founder lessons that she's learned. And then we're going to have Chuck and Matt from Republic are going to give a great talk about crowd equity funding, and you can learn more about that. But we're back to back, so I'm going to kick it off with Sam. And warm welcome for Sam.
Thank you. All right. So today I'm going to share some of the lessons I've learned just as a founder before becoming the president of Launch. I'm going to try to keep it light this morning as we get started off. So first, I'm just going to go over our funnel quickly, my history as a founder, a quick reality check, some learnings from my founder experience, a quick toolkit of some tools that I found and used over the years that I find really helpful, and then I want to drop some knowledge bombs on you guys. So I'm going to go through this very quickly because we reviewed it last night before heading to ping pong. But internally, as you guys saw, we have our projects organized into a funnel. So at the top, we have all of our projects that generate awareness. That includes our podcasts, blogs, social media content. We have a launch ticker, which is a twice daily email newsletter. And we also have Angel the Book. We also have our in-person education, so that is Founder University, Angel Summit, Launch Festival, Launch Scale, which is happening in October this year, and then all of this is in addition to the podcasts that are managed by Emmy Award-winning producer Jackie Deegan. So once the founders in our network have begun to approach our Goldilocks zone, we invite them to interview for our accelerator, which Demont presented about yesterday. This is our 10-week program. And once you start generating between 40 and 100,000 MRR and growing quickly over a month, be sure to email Demont because we'd love to consider you. Our check size for accelerator companies is typically, or it is $100,000. After the accelerator, we invest in our founders via our syndicate, and this is run by Ashley. Check sizes range between $250,000 and $2 million. And at the top, after the syndicate, when the money comes, there's a little money star at the bottom there. I thought it looked like an upside-down Christmas tree. So this means that all of our companies become unicorns, and we all live happily ever after with our private islands and yachts and solid gold toilets. So all of our projects revolve around our core mission, which is to support founders and inspire innovation. Now that I've given my launch spiel, I just want to tell you a little bit about me and my history as a founder. So believe it or not, as Jackie mentioned, I was actually sitting right where you guys are not too long ago. Now, seriously, I attended Founder University back in 2017 as a founder, and here's proof. This was the inaugural female Founder University in July 2017. So I was also what people like to call a serial entrepreneur, but I guess one difference would be that none of my companies actually were successful. So usually when I was jumping from one company to the next, it was because it had failed or I got bored. So my first real company was a device skin company. This is something I started in college with my sister. We designed device skins for sororities and fraternities and tried to make a little money doing that. It was a big fail. It was a fun side business, but ultimately we couldn't grow quickly enough, and because we were in college, we just got really distracted with other things. So after Savvy, I went on to start 5 other paid adventures, including a food blog that ended up supporting some of my expensive foodie habits in college, an event check-in app, a revenue-generating food blog, a restaurant consulting business, and a restaurant consulting business. So none of them turned into Fortune 500 companies or returned 10x to me or investors, or frankly, even 1x. Most completely failed. Others, I simply just lost interest, or in the case of the vending network, my idea was stolen, and it was stolen by a partner, and I just couldn't recover. To be fair, these are all projects I started while in college, but I did learn a lot. After college, I finally started a company that generated some solid revenue and experienced some growth. So Brewpublic is an enterprise beverage management service for offices based here in SF. The company is still running, but I left my position as COO due to co-founder conflict after 4 years last year. Over those 4 years, we grew 40% year over year, raised money from investors, had up to 17 employees, 30 contractors, hundreds of vendors, and 5 markets across the United States. TLDL, I haven't exited, I haven't started a Fortune 500 company, I haven't even worked for a Fortune 500 company. But I wanted to explain all this because I want you to know that I've experienced a lot of what you guys are experiencing. Some of you will go on to major VC funding, and some of you will fail. In fact, here's my reality check, 90% of you in this room will fail. The company I founded is alive and well, so I haven't technically completely failed yet, but through that and working with Jason and his investment team, listening to hundreds of pitches every week, I've learned a lot about what to do and what not to do. When putting together this talk, I thought back to what I wished I knew and was hearing while sitting in your shoes as a founder. And the biggest things that I want to share with you today are, number 1, wait, have I mentioned that 90% of you are going to fail? And number 2, everything is going to be okay. You're all founders, and I know you have a lot going on. I want to learn a little bit more about you. So my first question is, on a scale of 1 to a first-time founder running out of money, who is between 8 and a first-time founder running out of money? Raise your hand. Who is super stressed right now? Seriously, come on. Okay, now who is actually a first-time founder running out of money? Okay, actually less than I thought. So I understand how you feel. Here's a picture of Jason's face photoshopped onto a llama to make you feel better, or at least make you smile. But more importantly, we're here for you. So whether it be a hug or a quick therapy sesh during our group trip tomorrow, we at Launch as a team are on your side. We may not invest, but we're always willing to answer your emails, give you advice, and we're always going to be providing valuable content for you and your team and help you run your business. All right, so next question. I want to get a feel for where you are revenue-wise. So who in the room is pre-rev? Okay. What about 0 to 10,000 MRR? Okay, cool. So about a third. What about 10 to 100,000 MRR? Cool. All right, that's probably half. And then 100,000 or more. Okay, great. So most of you are making some money. Here are some things that I learned or wish I knew back when I was around your stage. So respect and nurture your co-founder relationship. As I told you before, this was one of the biggest issues for my startup, and this is the reason I had to leave. Co-founder therapy is a thing. We tried it, and it can actually be very helpful. You really do need to treat your co-founder relationship like a marriage. Cut the dead weight. So essentially, you are going to come across employees and contractors that are just toxic to your business. You might find yourself trying to argue, to keep them and think like, oh, well, they're doing such a good job with X, X, and X. I need to keep them around. But ultimately, they're going to become toxic to your business, and you just need to let them go. Don't sleep on culture. This is something that, as a founder, if you only have a couple employees, you may not worry too much about. But ultimately, culture is a thing, whether it's positive or negative. And even if your team is, only 1 or 2 people. Update your investors. So here at Launch, we require our founders to update our investors at least 10 times a year. You don't want to only be reaching out to your investors when you need them. You want to be keeping them updated, make sure that there are no surprises because they will be there when you need them. Delegate and outsource, so definitely utilize contractors. We used to utilize Upwork quite a bit, and I know there are more tools coming out. We also, at Launch, we've outsourced a team to Toronto, so we have our growth and marketing teams there, and we're able to get the same value of employees at half the cost. Always be testing new features. This one's self-explanatory. Get that customer feedback. Always try to meet them in person when you can. So a lot of people will just try to correspond via, your site chat features or things like that. But what you want to do is really, get them in a room, host feedback sessions where you're getting to them in person, and also listen to your power users. So when you have these users that can't live without your product, make sure you're communicating with them and really trying to figure out, like, okay, what can't you live without? And then also, what can I do more of? Okay, great. So I also have put together a list of some tools that I utilized at my previous startup that I found to be pretty helpful that I wanted to share. So how many of you have your full software stack figured out? So basically, raise your hand if you have your business running efficiently and everything is automated and works perfectly. Okay, cool. That's what I thought. So I do know what it's like to be bootstrapping. Every cent is precious. I've spent hours and hours researching tools, and I'd like to share them with you. Many are cheaper than the alternatives like HubSpot and MailChimp. So, as you are bootstrapping, these are the types of tools that you can turn to when, you just can't spend thousands and thousands of dollars on softwares. So starting with payroll. We at Launch use Gusto. We've heard that Gusto and TriNet are both great tools. Don't do payroll manually. There's really no need to. Gusto is actually only, I want to say, $30 to $50 a month. So it makes payroll very easy. And both of the services also handle the payroll taxes for you. For HR, 15.5 is a continuous improvement management software. So it sends different surveys to your team, and it takes about 15 minutes each week, so it doesn't take much time. But through this tool, you're able to gather feedback on a consistent basis. And then on the other side, Bamboo HR is essentially human resources software as a service. So HR is typically one of the last groups of hires you would hire at a startup, but you want to cover your bases in the meantime with something like Bamboo HR. So Workable is a site that I've used for policy templates. I think that the main use is actually for hiring. So I think it's about $99 a month to post a job, but I really like it when I'm setting policies. So this is what we used at BrewPublic to set most of our company policies from the beginning. So vacation policies, things like that. When you're building your website or app, many of you may not be able to afford a full-time developer, and if so, you may want to consider building your own site. That's what we did. So we used Webflow. This is my favorite. It's a responsive website design tool that offers way more flexibility, in my opinion, than Squarespace or Wix. And then if you are building an application, Bubble is another visual programming tool where you can create an entire application without needing to code. So both of these are tools that our portfolio companies rave about, and also tools that we use at Launch. So I know many of you have mentioned hacking together your MVPs. So Zapier and Segment are both tools that we highly recommend for that. I rarely meet a founder that isn't utilizing Zapier. So if you haven't tried it out yet, definitely take a look, because you can find you'll be able to build a lot just with Zapier alone, and you won't need developers. So at Launch, and then at my previous startup, we sent sequences through Mixmax, and then we used Pipedrive as a CRM. So even if you do need, so Pipedrive is actually a very simple CRM, and even if you need more features, you may want to upgrade to something like HubSpot later on. But both of these tools are very, very cost effective. So Mixmax is, I want to say, $50 per person, and also can take the place of tools like Calendly by offering calendaring and meeting scheduling tools. And then also they have embeddable email enhancement. So like you can do polling, you can really easily embed YouTube videos and things like that. And it makes your emails just kind of, it takes them to the next level. It makes them look really cool. Our team is seeing a 75% open rate with Mixmax right now, and about a 25% reply rate. So these are two options. We're actually not using them at Launch, but we use them at my previous company. Autopilot is actually a really great MailChimp competitor or alternative. So we found it was a lot cheaper. And also, if you reach out to them, they will give you a startup discount. I think we were paying around $50 a month, and we had a 20,000 person mailing list. So definitely a lot cheaper. And then AdRoll for digital advertising and retargeting. All right, so Zendew and Pilot are both tools that you can use for closing out your monthly books. Many founders don't give much attention to accounting, which is a huge mistake. This is something that you definitely need to pay attention to. If you plan to raise money, you'll need to have your books in order because your investors are going to ask for this information before they'll invest in you, and you want to have your ducks in a row. Bill.com is certainly one of the most popular AR tools. But Invoice Ninja, we actually found really useful. They have this really great dashboard where you can see all of your AP and AR at a glance. So we really liked that over Bill.com because Bill.com didn't have that dashboard. All right, so last one. So this one was probably the most beneficial to me just in the hard times of running a startup. So if you're in a cash crunch and in need of a line of credit, I don't know how many of you have actually sought some sort of alternative funding or financing, but there aren't many companies that will give you money as a startup if you're in need of money. So we found Kabbage. They're based in Atlanta, Georgia, and it took me probably 10 minutes to sign up and go through the onboarding process. And as long as you have decent credit, you can apply for a line of credit and they'll wire you the funds within 3 days. So we had a huge payment that was missed by a really big client of ours, our biggest client around the holidays. And if it wasn't for Kabbage, I don't know how we would have been able to make our holiday payroll. It would have been really bad. All right, so let's talk about growth real quick. So I do want to get a feel for the growth status of your companies. So who is growing over 20% month over month in the room right now? Okay, so about a quarter of you. Awesome. And so I'm assuming the rest of you are not growing 20% month over month. Okay. So for those growing, I don't need to give you too much advice on this. You know what you're doing. Be sure to send your updates to updates@launch.co because we want to hear from you and we may want to invest in you. So the rest of you, you're most likely in the zombie zone. So if you haven't heard of the zombie zone, you've heard of it, you're shaking your head. So it's when your startup isn't showing hockey stick growth for any period, between 4 and 8 months, we'll say, but it hasn't shut down yet and it hasn't phenomenally pivoted. So first I want to tell you, everything will be okay. So here's some advice that I have for you. Typically, it's best, actually not typically, always, it's best for the founders to sell and market your product yourself before handing it off. But once you do, so once you're in this zombie zone and you are generating revenue, but you're kind of stuck, you do want to go ahead and try to hire a growth marketer or your first salesperson because not many founders do this. Many founders will continue trying to do it themselves and they're stuck on that and they can't move on to other projects. Gather honest feedback from your customers. So this is another time where you would want to meet with them in person. So sit down with them, talk about your project, be like, okay, what am I doing that either you would pay more for, that you need? What can I build for you? Also, aim for product market fit before spending too much time on investors and large needy clients. Because if you haven't gotten to product market fit, there's really no point. An investor won't be interested in your company. Calm skipped a full fundraising round because they were delivering an exceptional product and generating revenue, and they had their heads down and they were focused on their product, and it paid off, and they're now worth $1 billion. Another thing to remember, especially while you're in the zombie zone, is that the team is the company and not the product. So if your product idea is failing, that doesn't mean that your team should. Try using your remaining resources to build something else if there's still passion left. If you're stuck, it can get nasty really fast. You'll lose inspiration, you'll start doubting your judgments, your relationship with your co-founders will get worse, and everyone says you're a success, but deep down you know you don't believe it anymore in it anymore, and it can get really bad. You want to prevent this. So that being said, the next thing I'm going to tell you kind of took me a while to come to myself, but it was crucial in why I survived being a founder. So we're going to do a little exercise. Right now, while it's quiet and things are relatively non-dramatic, you're away from your company, you're not looking at your accounting, think about a milestone that you can set for yourself that would mean the end of your current experience in your company and time to move on. So I do want you to write this down. So I want you to think of some sort of milestone that you can set. Because even if you don't marry the idea to the team, your team does have a limited runway and you have a limited runway. And this is something that's so important to understand because many founders actually don't. So at some point, your resources will run out. Even if you're sustainable without funding, you'll have and you get this traction, like your motivation will drop at some point if you can't get out of the zombie zone. So at Brewpublic, mine was, if my co-founder hasn't fixed X by August 2018, it's going to be time for me to go. So for me, it was actually due to our co-founder issues, it was very specific to my co-founder. But for some of you, it could be, okay, if we're not hitting, this profit margin, if I can't figure out how to fix this issue, if I'm not getting this satisfaction rating from my customers, it's going to be time for me to move on. Does anyone care to share your milestone that you had set?
Land one whale customer by July 1st, 2019.
Okay. Can you go ahead and say that again in the microphone? Sorry.
If I don't hit one whale customer by July 1st, 2019, it'll be time and it'll be okay.
Okay. I like that.
How do you define a whale?
A whale customer is somebody that books talent every single day, so they spend between $750K and $10 million in bookings a year.
Great. Anyone else? All right, I'll give you some more time to think about it. Okay, so with this, know that it'll be hard. I think you all already know this, but also please know it'll be okay. People will understand. So I just have one more slide of information, just some advice I'd like to give. So one thing that is super, super important is to be there for each other. So looking around the room, you guys have probably gotten to know each other a little bit. Definitely feel free to lean on each other. When I was a founder, and especially attending some of these launch events, I met some really incredible peers that I started to be able to lean to in times of need, which is a lot as a founder, and it was absolutely crucial. Be proactive to reaching out to others when you need help. Things can get really bad. Keep an eye on your mental health and seek therapy when you need it. There's co-founder therapy, but there also is real therapy. Make sure you're keeping an eye on that. Because a lot of founders think like, oh, I can just keep my head down, keep doing this, keep doing it by myself. But you really shouldn't. So attend events when necessary. So Founder University, Launch Scale, Launch Festival, these are all great examples of events that you can attend to meet other founders and to also meet investors. A lot of investors are willing to be your mentors too, even if they don't invest in you. Be sure to pay yourself enough, so you will feel like you will feel guilty not paying yourself. That's something that I definitely felt. I know my initial salary was $0 starting a company, and then I think I gave myself a raise to 45 and then 65, and that was the most I actually ever paid myself. Looking back, I do regret that. I think if I had just paid myself a little bit more, I would have been able to not worry as much about money and really focus more on my business. So there is a point to where it is worth paying yourself more, even if you feel like it should be going towards other things. I'll say it again, update your investors, because they're investing money in you, and you may often think that, I'm too embarrassed to tell them, give them this bad news or give them this update, but they're investing in you for a reason, and also they do understand the risk. So they're investors for a reason. They understand what they're doing. They understand that they're giving you money and it might not work out, so it'll be okay. And also join Slack and Facebook groups. So I found a really fantastic one. It's called Female Founders Community on Facebook, and I know there are hundreds and hundreds and hundreds of other ones. So definitely take a look on Facebook and Slack for these different types of communities, because you can really lean on each other when you need to either figure out a resource or you have a challenge. Most people are always willing to help each other. And I do have one last parting piece of knowledge. Everything will be okay. All right, and here's where you can find me. Thank you.
Thanks, Sam. Sorry, we're moving along, so no time for questions for Sam, but we don't have any programming over lunch, so feel free to find Sam and ask her questions then. She gave us a lot to think about. So now I want to welcome, is this mic okay? Okay, sorry, I know it's doing that weird thing. Chuck and Matt from Republic, who are going to talk to us about crowd equity fundraising. And you each have a microphone.
Thanks, everyone,
for listening to our talk. So we're going to talk about running an investment campaign. We operate in the industry often called equity crowdfunding. So I'm Matt. I'm on the investment team at Republic. And
I'm Chuck. I'm the CEO of the portal. Just a little bit more background. I mean, I started off as an investor in the company, and I came on as an advisor. I helped build out the deal team. That's where Matt kind of lives right now. We are 35 people in New York, about 10 people in San Francisco, so a 45-person team. And we'll get into it, I guess.
Totally. So does anyone know what equity crowdfunding is or has heard of Republic or what we do and how to raise money this way? Yeah, so we've actually got a few people here that have previously raised on the platform, are raising right now, or are going to raise in the near future. So you can find them. You'll ask around and you'll find them. But yeah, so we're a fundraising tool and a growth hack all in one. So I'm sure, how do I? So you guys are all familiar with raising from angels and syndicates and VCs and what bootstrapping is and going through accelerators and all that kind of stuff. So we want to give you another tool that you can use to fundraise and then also help grow your business. So we were born out of new regulations that were passed in 2012 called the Jobs Act and were finally enacted by the SEC in 2016. So that's called Title III or Reg CF of the Jobs Act. So before those regulations were enacted, only 2% of the country could really invest in startups because they were because of accreditation laws. So people that had an income of over $200,000 a year, year over year, or a net worth of $1 million, not including their primary residence. So it's about like 2% of the country, maybe a little bit more. But in 2012, President Obama, with bipartisan legislation in Congress, passed the Jobs Act, Title III. And after that, when the SEC enacted those regulations that reflected those laws in 2016, everyone can now invest in startups if the company is raising on a registered funding portal that's regulated by the SEC and FINRA, the Financial Industry Regulating Authority. So that's what Republic was born out of. So we're a sister company of AngelList. Our CEO of the entire company, Ken, was general counsel at AngelList and brought some of the product and engineering team from there and some seed capital from there to create Republic. We're still a sister company and part of that startup ecosystem. So why would it come? So the way it works is companies list on the platform and they can raise from everyone and anyone 18 or over around the world. So someone can invest as little as $100 or as much as $100,000 in a given investment campaign. So because you're casting such a wide net for investors, running a campaign is just as much about like press, marketing, exposure, community building, engagement, as it is about raising the capital. So you can raise a lot of money. You can raise up to $1 million in a given year. You can engage your user, your customer base, or the service providers that kind of make your business run and make it what it is. You can generate partnership leads. You can drive organic press. And it's really operationally easy because we've made it such that it's a variation of the safe note called the CrowdSafe. So it operates in the same way as a safe, but it's all one line item on the cap table, and investors only convert to equity holders at acquisition or IPO. So they're never on your cap table as individuals unless you want them to be.
I throw out there too that we also have other securities, whether it's debt, rev share, etc. On the team, there are 6 licensed attorneys. We take compliance and regulation very seriously and build these things out with founders in mind. We're all past founders, venture capitalists, angel investors, the whole AngelList thing. So we have a lot of experience with what you're experiencing, and we want to make sure you always put your best foot forward and you never shoot yourself in the foot. So it's important.
So there's a lot of misconceptions about the industry. We're not a Kickstarter. We're not an Indiegogo. It's not donation-based. It's not product-based. You can offer different levels of perks for different levels of investment, but it is a true investment, and you can count it as such, and your investors will view it as such. So here's a little picture of some of the some of the founders that we've had on the platform previously. Pretty diverse group of founders and companies. One's here, and lots of different companies at different stages and in different industries with different business models have found a use case for Republic. We've done about 60 companies so far. We've got about 125,000 registered investors. Of companies that apply, less than 5% are accepted. So We're a pretty curated and selective platform, so we're really bringing the best of the best to our investors, which is what gets them to come back and invest in again and again, and have people to have a lot of faith in the companies that raise with us. And 95% of the companies that go on the platform close or raise successfully, so they reach their minimum amount that they'd like to raise. So we have a pretty high success rate. So what kind of companies are a fit for this kind of thing? So we've had companies all the way from pre-seed to right before their Series B and after, actually. So we're looking at industries across the tech world and also outside of the tech world. So whether that be AI, VR, AR, blockchain. We actually even have a lot of CPG companies, brick and mortar companies. We have a brewery that's launching soon on the platform. So
and B2B works also. I think Matt surprised me yesterday. He said 35% of the companies that have raised on Republic so far are technically B2B. It works just as well for B2B. Everyone thinks it only works for B2C, so that's just a myth.
Totally. So lots of different companies have found, basically the way you want to think about it is all those people that say, wow, this is such a cool idea, but I can't write a $50,000 angel check. How do I be an investor in this? This is one way that you can do it. That's operationally easy, but they're not on the cap table as individuals. So it really helps to drive sales, partnerships, and get all those people that might be helpful to you to actually be invested in your success.
It's knowledge and marketing, right? You get in front of a lot of people. The other way that a lot of companies raise, and they raise quickly, is by going back to angel investors who like them a lot but never made that check for $25K. You'll find out a lot of times it's because they're not comfortable doing a bunch of $25K checks every year, but that's what they're presented, and that's the only thing they can do. But they'll put $5K in the Republic campaign, or $10K, or $1,000, and they end up being a supporter and team member for your company, just like you want them to be in the first place.
And then the last thing I'll say, too, is we're really looking for top-quality companies. So we've had companies that have gone through launch, that have gone through YC, Techstars, 500 startups, that have been backed by Lair Hippo, Slow Ventures, Union Square Ventures, Founders Fund, and then a couple notable angels, Kimball Musk, Mike Krieger, the founder of Instagram. So we're really looking for the best of the best, but at all different stages. So everything from pre-seed through Series B.
And that's really important, too. And also, they're service providers. So, Wilson Sonsini here has been the lawyer for a lot of our offerings. Cooley has been. It's because we've been, pounding the pavement and educating the market, the ecosystem about what we do. So a lot of people are finally starting to grasp it and see it as a tool in everyone's toolkit. Really important.
Totally. So wanted to walk through 2 examples of companies to just give you a sense of what kind of companies do this and why. So one, these are both companies that are actually actively raising on the platform. So one is Visual. So they're a solution to actually take vacant storefront and monetize it for commercial real estate. So they've got clients like, I think, Apple Music, Celine, Burberry, and they collect data, and they also can sell it to the whoever the client is as well. So the founder is Kobe Wu. Previously, before the campaign, she raised about $500,000 from a couple different VCs, lesser known, obviously. So New Age Capital, and then also XRC Labs, the accelerator, usually their fashion tech accelerator. Really notable clients, generating a fair amount of revenue. I think annualized, it's over I think it's about just $1 million in annualized revenue. And since she launched pretty recently, and she's raised about $50,000 on Republic, and then also because of her campaign got featured on Fox 5 News, which was really, really cool, and helped generate a ton of inbound leads for both sales and partnerships for her. And that's largely as a result of the campaign, just beyond the value of the capital.
She was also on our television show, Meet the Drapers. It's you guys know Tim Draper. It's with Sony Entertainment. It's an international television show. She actually made the finale. The finale comes out February 26th, but she got 3rd place in $50K from Tim Draper, so pretty good. She was also on another program of ours called Live from Tomorrow. It's a startup variety show that we do in New York City. It's very cool, super engaging and fun. It's comedy, it's music, it's a startup. In this case, Kobe was on one of them. And so we offer a lot of different opportunities for people while they go through their campaign.
Exactly. So that's one example of an earlier stage company. The second company I wanted to show you is Ample. They make meal replacement foods like keto and paleo kind of meal replacement things. You can fill up the bottle. It's filled with powdered protein stuff. So they're a pretty cool company. They've raised over $4 million in traditional investment from angels and VCs. You can see some of their backers, Slow Ventures, which has backed a ton of unicorns, Mike Krieger, Dick Costolo. Mike Krieger was the co-founder of Instagram. Dick Costolo formerly was the CEO of Twitter. And they've raised about $250K on Republic, largely as a way to give all those people that are incredibly passionate about their product a chance to invest. So it's a sales driving tool, a press tool, and then also a fundraising tool all in one, which is really cool. So that founder is Connor Young. They're raising right now. You could check it out, and actually invest today if you wanted to. So that's kind of the benefit of a later stage company doing this kind of campaign. We've had companies that have raised upwards of $16 million before raising with us, and then we've also had companies that haven't raised any money whatsoever. So it really runs the gamut. The value prop is different for different kinds of companies, but ultimately we found there's lots of different ways for a company to use us.
Questions? You're first, so I think.
Yep.
Okay. I was just waiting for the mic, but
Oh, it's coming. It's coming.
What is your recommendation on if founder wants to raise on the platform with a note simultaneously with raising from conventional institutional investors, perhaps even with a price round?
So concurrent's totally fine. It's absolutely legal, and we advise you to do it too. At Republic, if you were to come across an investor that wanted to go directly to you instead of through the portal, there's no penalty for that. We'll help you with it. We'll make sure that they pass that 25, 50, 100K check through, so that happens. We've also launched a new product recently that is specifically for accredited investors called Republic Labs, where companies can utilize their Reg D, and they can find a better platform, I guess, for the legal and the operational components that come with doing a Reg D. So we handle that for you also if you want to.
Could you give 2 extreme investor profiles that are there in the site?
2 investor profiles? Sure. So
2 ends.
Yeah, we've got a couple different kinds of investors. One is the accredited, and so about 30% of our platform is accredited. We estimate, we're not exactly sure, because we don't require everyone to submit income and net worth requirements. But let's say they're an accredited investor, they're a lawyer or a doctor or in another industry or a business owner, and they are accredited, but they don't have access to deal flow, and they're not super well-versed in VC or angel investing, so they use the platform to kind of deploy some excess capital, invest in kind of cool companies that they really connect with. And then on the other side of the platform, we have non-accredited investors that maybe work in tech or VC or in startups, but they don't make $200,000 a year. They don't have a net worth of $1 million. So they use the platform as a way to invest $100, $250 in companies that they're working with or seeing in the ecosystem every day, and they can actually maybe even be helpful to. Maybe they're the director of partnerships at another company that that there could be some synergy or collaboration with, that kind of thing. So it really does run the gamut. And then we also get people that are just middle-class people that really want to invest in businesses they believe in. So a couple different investor profiles.
Thank you. This is really exciting. What's the average raise from each individual if taking
each
out
company? Yeah. So I mean, back in the day when it was pretty early, the traction was slow. It was about $75K per company, so nothing. Right now, since inception, because it's gotten a lot better, it's just over $200,000. I'd say in the last 6 months, it's closer to like $350, $400 per campaign.
Hey, Chuck, Matt, this is great. Question for you is, if we want to launch a fundraising campaign there, what is the onboarding rate? How long does it take?
So you can definitely do it.
And what's the process for that?
There's 3 buckets. You should be able to comfortably do it in 30 days, and we do have a team that helps you along the way, every step of the way. There's the 3 buckets would be the regulatory filing, making your deal page, and then preparing your campaign strategy. So those attorneys that I mentioned, they come in handy for the regulatory filing. The deal page making, we have copywriters and designers that will help you make it look nice and pretty. And then the campaign execution strategy. So we have a campaign execution team member who will share with you all the different things that we give you access to, whether it be the television shows or the opportunities with the media or the radio shows at like WGN in Chicago or our blog or our email blast because you want to get in front of our 125,000 investors. All these things are kind of prepared in advance, and we make sure that you hit the ground running because a lot of this is a momentum game. If you're not able to build the momentum like early and often, it will fall flat for a while, and you have to like find other ways to like spark it back up. But we're there for you to work side by side.
Thanks, Chuck.
Are there, what's the cost to get up and running, and then what are the ongoing fees?
So Republic's business model is we take 6% of money raised in cash and then 2% of the securities offered in the campaign. So, for example,
just on the Republic platform, not outside of, and it's not 2% of your company.
Right. So
simple.
If you were to raise $1 million, we would take $60,000 in cash and a $20,000 safe. And then it usually costs companies between $5,000 and $6,000 on onboarding costs. So that's for the regulatory filing, for the escrow agent, basically get prepped for the campaign, not paid to Republic, but costs associated with running a campaign. Ultimately, we see companies using this as a sales driving tool, so they ideally are making the money back pretty quickly after the campaign.
I was wondering if you require any type of like social media spend or marketing dollar spend out of the companies that you partner with.
Not required, but highly advised. So we do our own for every campaign. If we do one thing for one campaign, we have to do it for the others. So we run a lot of like social media ads and other things to get you exposure. But we like to also work hand in hand with people that have a budget for their social media marketing. We'll share data and our experiences and back and forth.
And some companies have a list of, they have like, let's say 20,000 users, and they can raise almost like $300,000 from that existing user base without using any, running any Facebook ads or anything like that. So if you have an existing user base or email list that you have access to, you can leverage those and sometimes raise a lot of money just from those groups in a really founder-friendly way.
Todd?
So we have a board, and how would you recommend approaching a board if we were to go on Republic? Would you guys have things that we can download and
FAQs for investors, and then we're always available for a phone call with boards. So we do that pretty often.
Okay.
We'll talk them through it, let them know about whatever they need to know.
Okay.
What's the percentage split between Republic investors and new investors that got into Republic through our marketing effort?
So it differs from campaign to campaign. Sometimes we've brought in 85% of investors from Republic's network and our efforts. Usually it's about 30 to 50% from us, sometimes a little lower, but I give that to set expectations in case the company is bearing the brunt of it, which often is like 50 to 70% from their own network or their own efforts. But if you've got a huge network of people that you're already connected to, whether it's a service provider or a user or a customer, any of those people, like it's just a funnel. So if you can convert just a percentage of them, you can raise a lot of money.
Thank you. Could you talk a little bit about, I guess, where AngelList and you guys intersect or don't intersect, and maybe interesting strategies that you've seen implemented between the two?
Sure. So they gave us some of our initial seed funding. We're still sister companies and partners. So where we collaborate is on investor education, founder education, ecosystem building, events,
even human capital. So like if we're in need of a designer or a product engineer or something like that, or they are, we'll kind of help each other out. We even help build out CoinList, which is another spinoff of AngelList. So highly collaborative, friendly, and strong.
Actually, I'm going to rephrase that. Sorry. From the founder perspective, and during a raise, are people raising in both platforms? Sorry.
So you can do that. So our Republic Labs product utilizes the AngelList Syndicate program to actually do that at the same time. But also there's a banner on AngelList that directs people to our site, which is really cool to actually just live invest and to invest immediately too. So AngelList drives some traffic to our site, and some of their angels actually invest through our platform too.
I mean, that's where the core of our initial investor group came from, was from AngelList.
Cool. I was just curious on the investor side, are they able to use qualified funds like from IRAs and whatnot to channel through this?
So you can do self-directed IRAs for investment. There's only 3 companies that we know that actually self-directed IRA companies that work with private equity or startup investing. So it's not going to happen through like a Wells Fargo or like a Fidelity account, but they're very easy to set up, and we have them like integrated in our platform for people to utilize.
Is there a best time of year to get attention?
It's a good question. So there isn't much seasonality to the platform. August tends to be a slow month.
Yeah, it's not the one.
But people are, over December, people were worried about campaigns dipping because of the holidays, but people actually tend to deploy capital right at the end of the year. So there isn't too much seasonality, which is really nice. It's definitely like
that, and they're
bottom
actually
of
at
the
home
list.
and they have time to like think about it.
Right.
Or they'll allow the pestering from the founder that they know, basically.
Right.
Right. Hey, can you tell me a little bit more about kind of the reporting requirements after the fact? Like, does this add additional things that I have to do on my to-do list every month or every year?
I mean, just like Sam was saying earlier, you definitely want to update your investors. I mean, this is going to be anywhere from like 300 to 1,000 plus, investors in your company. They are a small marketing army for you. They're engaged. They're buying your product. They're telling people about it or your services. And so you would want to do a quarterly update. Just keep them in the loop. We have a tool set up on our side, so you can just send it to one place, and then they all get it, and they don't have to come back and get in your hair. You don't want 500 people emailing you. From a regulatory standpoint, there is one filing post-campaign the following year. It's called a Form CAR. And it's basically, so if you ran a campaign during 2019, you only provided information from 2018, but you ran it in 2019, so they want you to fill that gap of 2019 the following year. It costs, you either do it yourself or you pay one of our service providers, I think it's $250, and it takes them about an hour and a half to do it, and you don't have to do anything.
And that's the only one.
Just one time.
Sorry. I'm trying to still wrap my head around. So what's the difference? So can you just sort of say between the safe round and VC investment, where do you guys come in, and like where would I put you in my fundraising,
So, I mean, I've always kind of thought about it like this. Early stage companies want us for seed, middle stage companies want it for marketing, and later stage companies want it to evangelize their user base. You can run concurrent campaigns or concurrent raises through institutional investors or accrediteds or whatever you want while you raise with us. But that's, in short, kind of where they kind of fall in. Early, middle, late.
Yes, and a couple ways you can think about it. Let's say you raise your seed round, you raise $2 million, you want to raise an $8 million Series A, you're raising that in 6 months. You run a campaign as sort of a bridge, is how you can frame it. You raise $250,000, and then ideally at the valuation that you want to raise your A at. And it's actually a great way to turn around to VCs when you're raising your A and say, look, not only are people buying my product, using my service, downloading the app, but they love it so much that they're investing in it. It's an incredible traction point to point to.
Yeah, I think 75% of the issuers that have ran campaigns on Republic have gone on to raise from institutionals post-campaign. And it's because they have extra data points, extra stories to talk about.
And do you think that same will help, like, for example, if you do it pre-seed, and also show that same traction of how much people are interested in your company?
Yeah, definitely.
Okay.
What are the typical timelines? Like, you start for the time of apply till you get finalized?
So, I mean, the way that we built out and we do have a full-fledged diligence system too. So, I mean, it's very VC lens focused, but the way we built it out, there's an internal review, external review. There's an investment committee meeting. If all the stars line up, you can be done in 7 days on that part of it. Campaign agreement out, you sign it. It takes 30 days to onboard. We like to go with a 100-day, just arbitrary, like long campaign, 100 days long. The reason is that you can close a campaign earlier, much easier compliance-wise. It's just a click of a button kind of thing. But if you wanted to extend it, it becomes a compliance nightmare. So we just do an extra long, and then you can play in between that time frame and decide what you want to do.
how long it will take to the money to hit the banks?
To get the cash? So we allow rolling closings during, this is new, I don't know, OFO's probably like, what? So we started allowing rolling closings during the campaign, meaning if you get to 100K, you can take out 50K, you get to 200K, you can take out 100K while the campaign's going, and it's really no extra burden or operational burden on us. You don't do anything, and you get some capital in the bank before it's like technically closed. After the final closing day, you get, it depends on what's settled, but somewhere between like 75 and 85% of the proceeds in the first like 3 days after the closing. And then there's just like, regular escrow stuff you have to go through, and you get the rest, over the next 30 days.
Hello. This is great. I'm excited. And so a question on the 5% or so that don't actually do well. Can you describe kind of maybe what some of the issues were looking back, like what they should have did, or maybe from Republic's end what you should have considered, or just things to think about on that end. So if somebody's considering.
To me, a lot of it was just like cold feet. I mean, this is a platform where you get to scream off the mountaintop to everyone. And it's about, in short, kind of exposing yourself to the world. And if you're embarrassed by that or you're not comfortable with it, you're not going to do well. So those individuals didn't promote it. They didn't share it with their friends and family. Get out. I just never understood why, but that was really one of the biggest things that hurt them. And there's some other like minor satellite things too. Like they may have like an unreasonable valuation, or they may have a past record as appealing to people, something like that. But normally we kind of weed those out before they get to the actual platform. We'll catch it or like have them justify it so they can actually start to talk to people about it during the campaign. But yeah, I think the biggest thing is really just like not taking advantage of what we've offered.
It's an incredible opportunity to go out to regular people that want to support you and be able to raise money from them. So if someone doesn't take that opportunity, that's really the only reason why they would fail.
So if you have a mobile app, do you know whether or not Apple or Google has issues with you promoting it within the app?
Yeah,
they do not. That's worked out really well, actually.
Yeah. Quick shameless plug for Republic and my own company. We just went live on the platform, and the onboarding experience with Chuck, Matt, and the team was fantastic. So during lunchtime, since there's not a lunch and learn, if anybody wants to ask questions, happy to talk about it. And maybe check out our campaign page too.
Trust and Will is
Cody.
the company.
Thank you.
Thank you.
Chuck Pettit and Matt Melbourne from Republic. Thanks so much. And you guys will be around over lunch. So you guys had a lot more questions. It was awesome, and they'll be here, and you can ask them. Then they'll be around all day. So we're going to kick off with pitches again. I wanted to make sure everyone knew their numbers, because what we'd like to do is, the format. We're going to have 3 companies come in and pitch at a time. And then when they're in question and answer, I'd like the next 3 to line up over there so that everyone knows what's what. So the first 3 that are going up are already queued up, Ofo, Rick, and Guillermo. So the next 3 will be Kanchan Kumar, Javier Gonzalez, and Fred McGill. So when these 3 are in question and answer, can the 3 of you go over there? Okay. And then after Kanchan, Javier, and Fred, then there's Katerina, Carrie, and Eric. Okay? And then we can take it after that. Is everyone clear? You guys? Okay, cool. Can we set the chairs? Can I get help with the chair over here so Clara can come over here? Great. Clara and Jason. Can someone go get them? Yeah, you can turn that off. Yeah. Thank you. Thanks for coming. Everybody on my unreasonable to hike tomorrow.
Yes, I'll do this.
The hike is on.
I got one.
We were trying to use reverse psychology. Everybody's like, oh, God, you can't do it, Jason. You can't make everybody do a 5-mile hike in the rain. And there's a storm coming. To which I say, it's on. If my 7-year-old... Oh, good? An alert? Awesome. So it's on tomorrow unless the National Guard shuts down the hiking path.
Where's the hike?
I think we're going to just do the Headlands this time and end at the
nice.
Cliff House.
There's
And then we'll
alcohol
have
at the end of
brunch
it.
at the Cliff House.
Yeah.
What?
There's alcohol at the end.
Yeah, exactly.
Food.
Food, alcohol. But here's the thing. You can totally opt out of the hike and just go directly to the Cliff House in an Uber and just be warm and cozy and eat. And 6 of us will be out braving the elements for the greatest view in one of the greatest views in California, maybe even the world, actually. Top 10 viewers in the world. And yeah, we'll see you at the end. It's not a test. I'm not judging anybody. Check, check, test, test. Okay, everybody. How are your brains after yesterday? Everybody's brain okay? Good. Okay. I'm going to scan the room for people with laptops and phones out and then stare at them awkwardly until they put their laptops in their bags. It's going to be super awkward. Then I'll smile when the laptop goes in the bag. And if you have your laptop open, now's an incredible opportunity to close it and put it in your bag and be present. No laptops on the table, no devices on the table. That includes your phone, your iPad, includes that laptop that's charging, can't be. Yeah, go ahead and put it on the floor. Let's just take it and hide it. No, I'm joking. Let's not torture anybody. Okay. I think I see one more laptop on the table. No, it's a Moleskine. Great. Okay. Now I have to look at my team and admonish them most of all. Okay. My team's like, don't I get an exception? I'm like, really? I just gave you a huge speech, and then you're not going to do it. Okay. So now that everybody's present, while you're listening to other people's presentation, I want you to take that pen and that notepad. I want you to write down what you think, having seen this yesterday, would be a blocker that founder, one of your brothers or sisters in arms, what they will face down the road from a serious investor. Let's see if you too can look at another player in the game and say, oh, here's something mechanical with their shot that could be improved. So part of getting good at something is being able to be able to criticize yourself and also other people. It's kind of my specialty in life. No, seriously. Look at it like pretend you're an investor right now and you have to write a $100,000 check of your own money, or a $10,000 check, whatever is meaningful to you, and think, would you give it to this person? And what other questions didn't they answer that you would have needed to hear answer? Clara Brenner is an amazing supporter of founders through an accelerator she used to run called Tummel, and then her new fund. Every time I send a founder to them, they come back and say that was like one of the best meetings of my life. So we'd like to include her in everything we do, because although she's going to invest in, 1 out of 40 meetings, 50 meetings you take?
We have a less than 1% funding rate.
So 1 out of 100 people she meets with is going to get a check. But you can always really define how good an investor is by how they act in the other 99 meetings, as far as I'm concerned. So it's great to have her with us. She writes checks in the
250 to 500K.
Just like us. And the stage is typically
pre-seed and seed.
Pre-seed and seed, which means the companies would have ballpark in revenue if they did have revenue or traction.
It pretty much depends. I think we usually describe it more as momentum. We want to see some real demonstrated momentum in the right direction. And sometimes that means revenue, and sometimes we'll look at other metrics for traction.
Great. After revenue, what would be the next 2 that would be most interesting?
Team.
Great.
We invest in startups shaping the future of cities. That's pretty expansive, but we are looking for companies that fit in that bullseye, and that really does run the gamut in terms of industry vertical from more traditional smart city sectors like transportation and utility management, but we also invest in areas like property tech and fintech and education, but all at the really early stage.
Fantastic. Tell us your name.
It's Ofa.
Ofa, you have 2 minutes. 3, 2, go.
Awesome. Hi, everybody. My name is Ofo Izugu, and I'm CEO and co-founder of Who's Your Landlord. When I was in college, I was the vice president of the student body at the time, and students would come to me all the time with issues they were having around housing. Black mold being painted over, security deposits not being returned, harassment from their landlords. But not only that, we would see that home providers, now that more information was matriculating into the space online, they didn't really know how to navigate the space and how to connect with their renters on a deeper level. To solve that issue, we created Who's Your Landlord, where at the core we empower and inform tenants, and by connecting them with each other with information, and we provide landlords the ability to collect feedback so they better understand the sentiment of their residents and how to better service them so they can attract new ones, while also keeping the turnover down for the current ones. For renters, they can review their home providers in 7 key categories, ranging from responsiveness to condition of property and safety. We also provide for them a lot of actual content, so housing literacy content, and also now we've built in an AI chatbot where they can actually leave more conversational style reviews so we understand the sentiment of where they're coming from more. Our information is already being indexed with Google, and that they also index a lot of our content as well as gone viral. And this has led to us having over 120,000 monthly users on the platform, over 15,000 reviews in the Northeast, and reviews in over 225 cities nationwide. For our home provider platform, which is our beta, we now allow for landlords, property managers, and developers to aggregate their reviews from all over the web. So in real time, whenever a review is posted on Google Reviews, Apartments.com, Apartment Ratings, Yelp, they receive that notification through our platform and via email as well. We also provide for them a vanity link that they can share to their residents so they can receive verified reviews back as well, allowing for more insight and detail into what their residents are facing. We charge 50 cents per unit per month for those landlords, 125 minimum. Here are some of our current clients from our beta. We've been called the MVP of landlord review sites, and we keep killing it. So.
Okay, well done. Big round of applause. Next up, you can hand the microphone and the switcher to FinNest. F-I-N. Can you see okay? Great. Okay. 3, 2.
Good presentation. All right, cool.
All right. Sorry that the AV team is slowing you down. Sorry they're holding things up. Okay. All right, now that the AV team's caught up. 3, 2, go.
Hey everyone, my name is Rick Sawyer. I'm the CEO of Finest. We're a mobile bank designed for kids with the first Visa debit card in the US for kids as young as 8 years old. With our app, kids are able to track their money so it becomes tangible for them even though they're not using actual cash. Additionally, they can create as many savings goals as they want so that they can start parsing the difference between wants versus needs. Now, of course, we're talking about kids here, so parents need to be involved. Parents created an account, which takes about 4 minutes. Once the account is created, transfers within the family are instantaneous. Parents are able to stay on top of what their kids are doing with things like daily spending limits and instant spending notifications. They can also encourage good behaviors with things like our parent-funded interest feature. Now, we're working on this because, as many of you know, financial literacy in the U.S. is not in a very great spot. Most parents are not in a position to be able to even teach their kids about money, and it's not a topic that's covered in schools typically. Additionally, cash is disappearing from the household at a tremendous rate, which means that kids literally don't even see cash anymore. They just see their parents swipe a card, and they think plastic equals free. As a result, kids get to adulthood, they get out on their own, they're independent, but they tend to struggle when it comes to money. We're reaching our families in ways you would typically expect, digital ads, referral mechanisms. We've also done some interesting things like partner with youth sports programs that will put us in front of about 1 million kids by the end of this summer. We're also in early talks with some banks to offer our product directly to their consumers. We're still really early. We've raised about $600,000. We launched in September of last year, and our cardholders still number in the hundreds. However, we know the opportunity is very large, with at least 10 million families or 24 million kids in the United States who could benefit from Finest. We've built a strong team. We're up in Boston, myself and our founder, Clemens, 2 engineers, and a great advisory board. Thanks.
Thank you, Rick. Next up is Riders Share. Riders Share. Here we go. Riders share. 3, 2, go.
So most of you don't ride motorcycles. So imagine you're traveling to Texas and you need to rent a car, and the only option available is a Toyota Corolla, 30 miles away from the airport, $200 a day. You get there, even though you paid in advance, they're out of inventory. Sorry, no refunds. That is the state of the motorcycle rental industry. It sucks. The seasonality just makes it really hard for brick and mortar businesses to work. So we started like a Turo for motorcycles. We already have the largest variety of motorcycles in the world available for rent. Our prices are much lower. We have the only insurance policy for insuring motorcycle sharing in the United States. We launched it in February. I put in my 401k, my savings, $3,000 worth of credit card debt to get it to $64,000 in GMV by August. Right now it's the winter, but we're doing $40,000 in August, even though nobody really, rides in the snow. We keep over 50% of the GMV. I don't know why the numbers are coming out like that, but yeah, we're anticipating that by May, our average gross profits will be almost $90 per booking, and our acquisition costs last summer were $30 per booking. So if you do the math, you can turn this into really good returns for investors in a couple of years. The largest company in the brick and mortar motorcycle space generated $100 million in 2017, and then doubled the number of locations in 2018. There are 20 million people that have motorcycle licenses and don't currently own a motorcycle in the US alone. Double that in Europe, and there are a lot of adjacent markets we can grow into. We built this, just the two of us, my co-founder, the website, me, everything else. We hired our first employee a couple of weeks ago, and thank you.
Guillermo, is you? Got it. Okay. All right. So we saw 3 really well thought out companies, I thought. Let's bring up Who's Your Landlord first. All 3 of you can come up and stand awkwardly next to each other. We're going to give you just general feedback on the company and the pitch, what we think your blockers are going to be, and then any questions we might have, and we'll do them in a row and then pick our favorite. So, Clara, why don't you lead us off? What did you think of Who's Your Landlord?
I thought your presentation was great. Thank you. Some questions that occurred to me, I think we see a lot of real estate tech companies, and something that a lot of them struggle with is there's very little incentive for landlords to adopt tools right now because they have almost 100% occupancy, so they don't really need or care much about how their tenants feel. So I'm always curious to hear why you think you're different. I have other questions, but you want to...
Yeah, and just I thought the product looked slick. You and I have been in an email conversation for a long time, like maybe 20, 30 emails back and forth, and I've been encouraging you to really think about that monetization and how this becomes a sustainable business. Obviously, there's a need for a Yelp, but two-sided marketplaces like this, like Yelp, extracting value is difficult. It seems like you have a model asking them to pay $6 a year per unit, so if they have a 60-unit apartment. Use the microphone. Yeah, 50 cents per unit per month.
Right, correct. Yeah.
And are they paying
Which
it
is
right now?
$6 per year.
So our beta starts at the end of the month. We already have some of the largest clients in New York, or developers in New York City and Philadelphia signed up for the platform for the beta, and they're paying us outright for the next 3 months. So that includes Berkadia, Warren Buffett's company. They manage about 50,000 units and have also clients as well. And that includes Shift Capital out of Philadelphia, Mosaic, and a few others.
Great. So I was also impressed with the Google relationship. I would always drill down when I see you got a Google partnership like that. Okay, that's interesting. Why? But how much money are you making? What will you make in the first quarter? You said these are 3-month trials or beta tests, I guess. What will the revenue be for Q1? And then your question was?
I was just wondering how landlords really feel about using this.
Yeah.
So to address the second question first, so landlords, the thing about it is we spend time building up the consumer side of the business. So we have a lot of traction within communities, even Philadelphia, DC, New York, our top 3 cities. And so when we talk to landlords, we were able to use that kind of as a platform to say, we got the Innovators and Disruptors Award by NBC in New York City last November, and we've done a lot of things the right way. So when I talk to landlords, it's really from a standpoint of you want to know more about what's going on with your residents. And so in our ability to aggregate reviews from all over the web to notify them in real time saves their marketing manager 30 minutes per site that they're going on and doing that kind of stuff with, because you can also respond right from our website as well.
What do you think of that answer?
there are a lot of companies in this space that are coordinating communication between landlords and tenants. So I'm not sure that's your biggest value proposition. Also, a lot of the companies we're seeing in this space embrace tools like natural language processing to kind of say, like, really what we're doing is you don't have to be part of this at all. Like, a lot of the answers we can automate. So I'm not sure that's your biggest value proposition.
Yeah. And let's get to that question about what's the actual revenue traction? Because you were a content site, I think, first.
Sure. Reviews
and content, and these sites always struggle to kind of figure out a business model. What is the business model? And how is it going? Specific numbers.
Sure. So, I mean, the key thing about the business model now is it's a SaaS business model. We charge a subscription fee. We looked at what folks in the industry already were doing, like property management solution softwares, like AppFolio. We already, and that's how we derive the 50 cents per unit per month for that. So for our beta clients, they get 50% off, and it's going to be
I'm going to just stop you right now.
Yeah.
So remember we talked yesterday about answering questions crisply. I think it's something everyone should work on. And then, so answer the question, then do the backload of all the things you want to add.
Right.
So, like, I'm just trying to get an idea of, like, is this $100,000 a month or $1,000 a month in revenue? But I still, I'm 5 minutes into answering questions, I still don't know. So tell me the actual number.
So, so Cortland, for example, 100,000 units, they would be paying $50,000 a month. So, in terms of the beta,
okay, now I'll stop you again. Yeah. So, are they paying $50,000 a month, or you're saying they would be?
Yeah. Well, once they're signed up, they will be.
So
in terms of,
I'll just tell you what's going through my mind. If you don't get the answer really quick, usually it's bad news. So what is the revenue what was the revenue in January?
10,000.
Okay, so that's actually pretty good news. So one thing that's a good lesson here is when you actually have the nuts in a poker game, there's something called slow rolling, which is like you have the best possible hand and you're all in with another player and you're like, oh, you have a set? Oh, I have a full house, and like you break your heart. That's called slow rolling. So that's what you just did. Like, if you had just said in your presentation, like in the first 2 or 3 slides, we charge landlords $6 a year per unit, and we have $10,000 a month. So that represents about 20,000 units already paying. Then we would all be looking at this business differently. So, like, when you have the great cards, you turn them over real quick. It's an etiquette thing in poker. When you have the real actual numbers, turn it over real quick and let us know, because then the whole conversation is your perception now totally changed?
For sure. I mean, it's the worst thing in the world. Usually we spend about half the meeting just like digging to try and get like, no, but have you anyone ever paid for this ever? And usually the answer is no.
Right.
And it's like, just save us all some time. We can ask you some other questions instead.
Okay, let's pass the microphone.
Gotcha.
For FinNest, I'll go first. I want this I have a 9-year-old daughter, and I'm big into teaching her entrepreneurship, London, and I'm going to buy it for her like literally tonight. Like, it's like one of the things we're really working on is money, and getting her to love the idea of acquiring money, and that money is important. Capitalism is important, and that socialism is like a disease that's spreading and it's going to destroy America. So like I'm really trying to indoctrinate my daughters into being capitalists right now. And you have 600,000 raised, but you never mentioned in your pitch how you make money.
Yeah, we charge a subscription fee. We also make money on interchange.
Okay, so he answered it like 10%. Like, how much do you charge?
We charge $36 a year per card.
Perfect. I would pay $36 a year for it. Good.
I was actually building on that, wondering how you actually sell. Like, how do you get into families? Are you selling through banks? Are you selling direct to consumer? I was interested in your comment that you guys were the first mobile bank for kids. We've definitely seen a few companies in the space building financial products for kids, specifically like debit cards. So.
Yeah. So I actually said first Visa debit card.
Okay.
So.
I'm going to jump in here. So this goes to claims, right? And we talked yesterday about securities fraud. This isn't securities fraud because he's not saying like we have $1 million in revenue and we don't. But it would go into the bucket of intellectually dishonest.
Okay. Yeah, in a full pitch, I'd go into all the competitors.
When intellectually dishonest, credibility goes down. And so just be careful with that because you're dealing with somebody who's particularly sharp over here. And like she just said she invests in 1 out of 100. You may have just disqualified yourself just like on character, which may not actually be an issue, but go ahead, keep going.
I was wondering interest rates. I mean, right now interest rates are so low, so like there's super little incentive to keep money, even for your kids, in a very low interest-bearing account. So wondering, is it really just the lesson that you're selling, or are you actually trying to incentivize people to save?
Yeah, so we don't currently offer interest at all because we don't make any back from our bank. It is something that we're considering offering in the future, but right now we don't offer any. It is, we see families hold not a ton of extra money, just enough to be able to transfer money when there's more needed on the card. But, we generally don't see people holding 5,000 in their account or anything.
We've
like that.
seen a few companies that are specifically more focused on like babies and 529 savings plans, offering like they'll partner with a local bank that can really only offer like a pass through of maybe 1% once the company takes their cut, but it's better than nothing.
Yeah.
So something to think about.
We're actually in talks to offer 529 for an entire state upcoming. So.
So with the thing I would do next on this one, because I'm sort of interested, is I would try to figure out, I would use the product, and then I would figure out, is there a way for you to acquire kids at $36 if their lifetime value is 2 or 3 years? So let's just say it winds up being a $75, even $100 lifetime value. I'm wondering if you can acquire people sustainably with that. And then I'm also wondering about what's the behavioral hook in the app. So spending money and tracking it, I kind of like that. That might be enough to get me. But I was also thinking, God, we're doing this thing with chores for money to try to teach our daughter about this concept called capitalism and work for pay and, opportunity and all this stuff. Like, so the like if I could put in it, like, here are the opportunities, like clean up the dog poop in the yard for this amount, like clean up the dishes at this amount. Like, these would all like be things.
Yeah, we're going to build gamification into the app. I spent the last 4 years working at DraftKings, and that's like what I did there. So.
Oh my God! So that's super. Like that, I love that. Like, I'm gonna do if it was me, I'd be like, DraftKings is addicting, and the average user spends X amount. We're gonna take all of what I learned getting people to be compulsive gamblers and teach them kids how to be compulsive savers and frugal with their money. I'm Jason Calacanis, the CEO of blah blah blah. Here's how we make money. Boom.
I would just, as much as you need the kids to get involved, the parents do need to as well. And Americans, both kids and adults, are very bad with money. And so I would be curious to know how you engage them on a regular basis and also probably teach them how to even start using your tool, because many of them, I imagine, would be as clueless as their kids.
Yeah, it's a very good point. The product is still in, I'd say, MVP stage. Part of what we want to do in building out kind of so if you look at our product roadmap, the first thing is like a content layer, and then the next thing is going to be a gamification layer. That content layer is kind of going back to what I was saying before in the pitch, that we want to make it so that the parents can be involved in teaching their kids about money. So when we did a pilot program, for example, which was very hacked together, one of the most popular features we had was like quiz questions, where we could basically give the questions to the parents so that they can engage their kids.
Okay. Next up, ride shares. Ride shares?
Rider share.
Rider share.
It was a cheap domain back when I bought it.
No problem. You can fake it till you make it. Rider.
Riders share.
Rider share. Like a possessive, like rider share. Got it. Okay. What'd you think of this one? You ever ride a motorcycle?
Hell no.
Yeah. Vespa? You ever been in like Italy or Spain and zip around
like
on a
ciao, yeah, I've done that before.
On the street.
But
I do that. I love that.
I don't know. I think to that point, I think a big part of your market growth, because honestly, the market size of existing licensed motorcyclists is not super big, and so I think getting more user adoption, I think, will be really interesting. I'd be curious to hear your impressions of companies like Scoot that have really struggled to specifically grow the market share of just scooter riders in markets like San Francisco, and in fact have moved to other forms of transportation to kind of get users in the US more into it. Or maybe this is an international play. That was the thing that I kept thinking about.
Yeah, so that's the thing you're going to have as your gating factor, but I wouldn't let it gate you if you're passionate about it. Some of the best companies will manifest a market. And so my wife and I were talking about Steezy, the dance company that we invested in. And she's like, yeah, it's such a small market. And I was like, it's interesting. I got the same thing when people talked about Uber, because they thought Uber was black cars. And I got the same signaling with Calm, because people said meditation was a niche thing. And I was like, what happens is a whole nother group of people, because it's more accessible at a cheaper price instantly, then if you actually pull out a lot of friction, you might actually get people to try something. And to Clara's point, I think Scoot is a really interesting company to look at here. They launched at our conference 10 years ago. We never invested. I'm not sure if they had a great outcome, but people didn't want to get on a greasy motor scooter. Motorcycles are too dangerous. Everybody's on their phone here. But I do think these new electric bicycles that look like motorcycles are kind of interesting and not your thing. But there might be a big enough market. And so what will happen, I think, in a space like this is it's up to you to go prove it. Right? And so I encourage entrepreneurs, we're going to look at it and go, we think it's too small. But if you start showing us it's highly profitable and that you can be the biggest player in a small market and it actually turns into a great business, great. But you should just be self-aware and cognizant of the fact that you've limited your market to 2% of the population.
Yeah, so there's this common misconception that motorcycles are transportation, like Scoot. Yeah, I mean, we have scooters on the platform, nobody rents them, right? It's an experience. People go for Ducatis, BMWs, Harleys. 60% of customers in the actual market are foreigners, it's tourism travelers. And like the largest company right now that is charging $200 a day and they only have Harleys is, they're probably making $200 million in revenue per year right now, right? So
I think that's where you'll prove it to us, because if a Harley costs on average $10,000 is the value of those Harleys. 6,000 they're used, some of them.
Yeah, used 10,000. Yeah.
Used 10,000.
Yeah.
So $200 a day.
I know.
Is 2% of the value of and the person that probably rents it on average for 5 days.
Yeah, they want long trips. Yeah.
So if they do these long 2-week trips, maybe there's a weekly rate, but it sounds like because nobody provides it, there might be a huge opportunity here.
So we charge double what right now we're averaging double what a car rental company charges. So that's why we have we're going to have insane gross margins, and because the market's so uncompetitive, we can grow quickly.
I'd be curious to know what kind of insurance products you need to offer, especially since you seem to be talking about folks who don't own motorcycles, so they probably don't have the right insurance off the bat.
Yeah, it's kind of our competitive advantage, and people are very eager to pay more for insurance with motorcycles because they overestimate the risk. It's just a natural thing to do with risk in general, and that's how again we pad our margins.
So if you were in our accelerator, as an example, this question would come up, and then we would work with you to say, what's the best slam dunk for that answer around insurance? Right now, you don't have a slam dunk answer. You might be able to work directly with an insurance provider to do a per mile. It's like a kind of a new thing, per mile insurance.
So
hold on. Per mile insurance, and then be able to really look credible to investors that you've really thought this through and that you have a neat model. But don't respond. We're now going to pick our number one in terms of the one we would most be likely to invest in, invite to our accelerators, or take a second meeting with. Okay, I've got mine. You've got yours. Go ahead.
My first choice was Finessed. My second choice was Weil. And then my third choice was RiderShare.
Okay. She's such an overachiever. I just asked for the number one. She gave me the actual stack ranking, so now I have to actually do some hard thinking. Finessed I did pick as number one, but I actually picked RideShares as number two because I kind of like the idea that nobody else is doing it and that you have to manifest the market. But it's kind of a tie with Who's Your Landlord, because having talked with you, you seem so dogged and relentless that I get this feeling that you're going to figure it all out. I'm going to wind up being on the cap table because you're just going to hound me until I am. And so I get the sense of inevitability. Like that $10,000 a month feels to me like you're going to get it to 15 or 20, and then you're going to be in our accelerator. Okay, let's give him a big round of applause and bring up the next three. Okay, Remitter, and in the grand tradition of Silicon Valley, we're misspelling it, REMITR. Back to the misspelling of to get the domain name. You have Remitter.com, right?
That's right.
Good, okay.
That's the reason why the name is Remitter.
I love it. Fake it till you make it. 3, 2, go.
My name is Kanchan Kumar. I'm co-founder and CEO of Remitter. We provide a way for small and medium businesses to make a payment to their global supplier, contractor, employees without the complexity of wire transfer or cost of PayPal. How many of you out here deal with more than one country, supplier, employee, customer? Pretty much everyone, right? That's the point. The share of small and medium businesses in global commerce has been steadily growing. Just in US, which is one of the lower, 36% is a share. Go back 20 years, what we used to call multinational corporations were large corporates. by definition, today, each one of us, tiny two-people organization, is also multinational. However, international payment sucks. All of us know that, and I can see that on the face of many of you, right? And that's what we are changing. It's still manual. You don't know when the money will reach. You don't know how much exactly will reach, but you know what it's going to cost. What we really do is that we just change everything. Money reaches within one business day, 63 countries which are on our network, which we have built proprietary network. $5 flat fee. Our currency exchange rates would be in the range of 0.5% to 0.75%, depending upon which currency you send. And it's integrated with your accounting software, which means one click and you're paid. Case in point, a customer that we don't know of signs up on our site. They're a family-run meadery. I didn't know what meadery was till they signed up. They make like 12 to 15 payments to the suppliers across some 6-7 countries, $65,000 a month. They used to go to a bank to make that payment. Each payment will take them 30 minutes, and they cost a lot more.
Okay, well done. Big round of applause.
This is what we're doing.
Big round of applause. Okay, next up is we keep the trains running on time here. Okay, here we go. Everything is a test. The 2 minutes. The hike's not a test. Hike's a test. Okay. 3, 2, go.
Hello, my name is Javier Gonzalez, and I'm the co-founder of Tickery, which is the leading Latin event ticketing SaaS platform in the U.S. So for Latinos, music is a huge part of our culture and identity. It helps us connect with our history, our roots, in our native countries. But buying concert tickets to see our favorite artists performing in the U.S. is really hard right now. To buy a concert ticket to your favorite concert, you probably have to call a random phone number that you saw printed on a poster and agree to meet up with a complete stranger on a street corner to pay tickets in cash. So over the past 8 years, we've bootstrapped and built an event and concert ticketing platform that caters purely to the Latin market and solves this problem. Our tools are used by venue owners, event organizers, and tour managers all over the country, helping them sell and market their events. Our platform enables event organizers to register and start selling tickets to their events in seconds, providing them with all the self-service tools they need in order to manage their online ticket sales, access their analytics and marketing data, and use event day tools such as ticket scanning and ticketing reports. On the consumer side, we're the leading platform for Latinos in the U.S. to use to both discover events and buy tickets. In 2018, we did $7 million in ticket sales, selling over 200,000 tickets to music fans around the country. We've seen an average growth of 91% year over year in revenue. And we've worked with a lot of partners with Boost Mobile, Heineken. We're looking to raise $1.5 million in order to streamline our... Oh, sorry, I saw you were asking. To streamline our onboarding process and to develop new product lines. This is just the starting line. We're looking to grow huge, and the Latin market and Europe markets
Well
next.
done, Tickery. Tickery? Tickery, got it. I pronounced it correct?
Yeah, that
Tickery, got it, okay. Okay, simple showing. Real estate for the modern world. In 3,
Yes, sir.
2, go.
All right, what's up, you guys? Fred McGill, Simple Showing. We believe that the home buying process that exists today is fundamentally broken. Agent fees are crazy high, the process is outdated, and consumers are largely unhappy. So they're discovering other ways to find homes, and nearly 70% of these people are finding the home they ultimately buy all by themselves. So they're doing this without an agent. But there's a problem, right? These people cannot get inside the house unless they have an agent attached to their hip, which is crazy, we think. Why do you need an agent to tell you the countertops are granite? No one knows. That's why we came up with Simple Showing. So we are buyer-initiated showings. We put the buyer in the driver's seat, not the agent. So you control the process. The best part, you don't have to sign a contract, no buyer-broker agreement, and we kick back half of the commission back to our buyer, about $6,000 on average. So it's very simple. All you do is search on our app just like you would Zillow, book a day at time, the property, of course, and then save money at the end. You do not get to keep that check, but you get a real refund. We do have a little bit of traction. We rolled out our app about a year ago, a little over a year ago. We have more than 1,000 showings, and we've discovered that only, or about 70% of the people, only 30% don't buy the house with us. So a pretty high conversion rate. We're doing about $60,000 in monthly run right now. This is transactional. We're not recurring revenue. So we make money when someone closes a home through us, and we think that we'll hit $100,000 in run rate by this May. We have a really great team that's got a really strong mix of real estate as well as tech and startup backgrounds. We are currently, as I said, we're doing digital brokerage online showings, but our evolution is going to become more of a transactional-based platform so that people can make offers through our website, and then eventually we're going to move to humanless showings. We have raised $500,000. We're in a very big space, $50 billion industry in the top 25 markets, which means we need to raise more capital, where Jason comes in to help us. Thank you.
Okay, well done. Big round of applause. Let's bring up Remitter Tickery. Pronounce it for me one more time. All right, so make me seem not stupid. How would you say it? No, you say it in Spanish. Like Tickery. Tickery. Bueno. Okay. Who do you want to start with?
Just start from the top.
Okay. Remitter, go.
Well, obviously you got cut off a little bit. I would say it took a really long time to get into the pitch. And actually the most interesting part was the actual case study of the meadery, I think you said. So understanding what their pain points were, having more specifics around like who the top players are right now in terms of processing payments are, and understanding a little bit more about that would be helpful. And also just understanding what your special sauce is. There are so many wire transfer companies out there, so understanding why it is that you're going to deliver better fees than anybody else would be very helpful.
Yeah, one thing I'll just give as a general piece of advice, and in those 4 best practices that I came up with 10 years ago for stage presentations at TechCrunch 50 and then Launch Festival, getting to the product in 15 seconds is something I've said is super important, and examples matter, synchronicity, and show, don't tell. Mm-hmm. And so if you look at this presentation, it took a really long time to get to like an example that mattered, and we ran out of time, and you did a big setting of the stage. And typically our signaling is 9 out of 10 times when somebody says, let me set the stage, it is a meaningless exercise, because you're setting the stage with people who review probably on average, 20 meetings a week in person for you, 10, 20 in person, and then maybe sorting through a couple of hundred emails a week of pitches. Am I in the ballpark?
Yeah, it's a lot.
Like, you don't need to set the stage for Clara Brenner. It's just like, it's like...
Point noted.
Yeah, it's like, okay, Steph, this is where the three-point line is. And so if you shoot the basket from behind this line, you get 3 points. And he's like, I shot 400, I hit 300 three-pointers last year. I know where the three-point line is. Like, you're setting the stage as to how to put the ball in the basket for people who do it for a living. Like, just really be careful. Get to your point. Like, if you want to set the stage, it better be something that is a fantastic insight, like a Malcolm Gladwell TED Talk, not TEDx Talk, but TED Talk. Yeah. Okay, like not the fake TED, but the real TED Talk. Okay, and if any of you put TEDx on your speaker or visionary on your bios on LinkedIn or Twitter, change that today.
Well, I'll just jump in and say one thing. We have a company right now in the breast milk shipping space who I love, but most people are not, especially venture investors, are not really familiar with anything related to breastfeeding, because most of them are men and they have no idea what's going on. And so the first version of their deck we saw, they had like a 5, I don't think she would mind me saying this, like a 5-slide setup of like, this is what happens when you become pregnant and then you have to breastfeed and then this happens. And it was like, all you have to say is, it's really complicated and it makes it really hard to go to work. Period. Like, we'll trust you on that. And even for investors who are really unfamiliar, I think you can just say it confidently and just be like, it's challenging for small and medium-sized businesses. Even for an investor that's not familiar with the space, you still want to get right in there.
So since and I agree with that, and especially the part about we know nothing about breastfeeding, like that moment where you see the machine for the first time, the breast pump, and you're just like, wow, science. Incredible. So how much revenue, how much GNV did you have in January, and what's your take rate?
On an average, varies month to month. On an average, we do 0.6%.
Hold on, I'm stopping you right there. What was my question?
No, GMV.
GMV in January, and what was your take rate?
Yeah.
Let's try one more time. What was your revenue in January, and what was your take rate?
$5 million, 0.68%.
0.68%.
That's right.
So $5 million got
That's right.
transferred through your platform in January.
That's right.
And you took 68 basis points.
That's right.
And that would be a total of 1% would be $50,000, so slightly less than $40,000.
That's right. That's right.
So here's like an incredible, extraordinary piece of information that he never got to because he was setting the stage and like educating us of where the 3-point line was or breastfeeding and whatever. So complete foul. Pass the microphone. Okay. Well, that's why we're doing this. It's Founder University.
Can I make a random comment though?
Yeah.
I know you feel differently about this than I do, but at our firm we really hate GMV. It's like if you lead with your GMV, it means to me that you're not making money. You have to pair your GMV with how much money you captured at the end of the day. If you just have your GMV in there, we're like, no.
No, GMV without your take rate is meaningless because you could be selling $100 bills for $90.
Right.
You'll have a long line. So I agree totally. In here, what we say in our accelerator is, if you're going to put numbers up, be prepared to do math. That's all. Like, you better have your math perfect, like, because you're going to be dealing with sometimes people who like live in Excel for 4 hours a day, and they're just better at it than you, and they can do math in their head better than you, and it's an asymmetrical information landscape. You know your take rate, but you don't know your competitors or other industries, and we do. So we're like putting your take rate, like 0.68. Okay, what does Square get? What does Stripe get? Okay, what are the people who use Square and Stripe get? You know, like we're just way ahead of you in processing that. Let's do Tickery. You want to give general feedback?
Yeah, you said you guys were the leading platform for Latin ticket sales, but it provided no context for the market. It would be really helpful to understand. I mean, your GMV, again, was great, but I had no context for how much money you guys actually make. So that would be really helpful. There are just a lot of ticket platforms out there, and so understanding, is it that you guys generate your own content that makes people come back? Is it that you have a different sales strategy or a different price? Like, it would be helpful to understand why Latin music impresarios are going to be using your platform versus anybody else, because it looked pretty similar to a lot of other platforms that are out there.
Yeah, and so this becoming aware and anticipating what investors are going to say, like, it's so obvious that we're going to say, okay, you're eliminating 80% of the market. It looks like Eventbrite. So you've captured audience, sort of to the same motorcycle riding kind of rental platform issue. But the $7 million is real. So
sure.
I think presenting, we made $70,000, or we made $140,000 last year on 7 million ticket sales. And this is the reason. So like, just presenting that in a sentence is super easy.
It was 600,000 was our take.
Okay, so you take almost 10%, 8%, and then you have to pay 3% to Stripe?
Yep.
It's
interchange fees are about that.
About
Actually,
3%. So you actually make more like 5% of that after you pay that fee.
Yep.
So you're made $350,000.
And interchange is much lower for the Latino community because they have debit cards or lower value Visa cards. So
maybe you make 6% net. Mm-hmm. So this is where, again, you start doing numbers, we start doing math. We're going to be in this math exercise together. You might as well just put it in there, like in a sentence. After fees, we net out to 6%. 6% of, $700,000 last year was $420,000. We have 5 employees, and we're break even in the fourth quarter of last year.
Also,
so I said in one sentence, like, I anticipated 3 questions.
If you've been around for more than 12 months, please tell me how much you made in the last year. Also, because sometimes people will be like, we've done, $1 zillion in revenue. And then you're like, actually, you've been around since 1984. And like, I need to contextualize. Just tell me how much you did last year. Is the 7 million
That's
last year? Yeah.
Yeah, so here's a simple sentence. We formed the company in 2016. We launched the product in 2017. In 6 months in 2017, we had 100,000 revenue. In the full year of 2018, we had 7 million in revenue. We took 6% of that for $420,000. We have 10 full-time employees. 2 are here in America. 8 are in Cuba, where I'm from. And we hit break even in December. We're now raising 1.5 million. We're looking for a $6 million cap. I'm Jason Calacanis, the CEO of Tickerati. And in that took, I think, 18 seconds. And I anticipated everybody's, and I didn't look at notes. I just did it off the top of my head. I said it from the heart. And what happens is founders sometimes I think are ashamed by the scale of the numbers, or they've gotten some kind of negative reaction in the past, so they're just not upfront, and they backload all that. I suggest putting it all up front. We are specialists in looking at nascent companies, and we've seen companies go from $1,000 a month in revenue to $1 billion in revenue. Like,
But
we've
also-
seen this. This is our job.
Also because it's helpful. I'd rather spend the time asking you about your business and what makes you special. But like, I'm going to ask you these 5 questions, and if we ultimately spend 10 minutes of me digging, being like, but what's your GMV? But was it in 2018? And how much was your cut? Like, then I'm going to spend my time asking you that, and then I'm going to walk away not as excited as I could have been.
And that was one of the concerns I had was, both explaining what the Latin industry is in general to people that don't usually interact with the Latin industry, and then I don't know how much you know about the music industry as well. So it's those two things that are very different from the tech space.
Yeah, I think you're probably making a mistake there. I would assume we understand ticketing. I would
Right, ticketing,
assume we
yeah.
understand enough about the Latin market to get by, and we certainly know about all the startups and what a great space it is at scale to build these platforms. And then the question I would have is, what percentage of the market have you penetrated in each of the, Latin-speaking markets, non-Latin-speaking markets, and what's your rollout plan? So this is where being efficient in your presentation can really pay dividends because, again, you as Jackie said in her amazing presentation yesterday, which I think deserves an extra round of applause. We've been asking her to do this presentation for a year, and she finally did it, and it was like extraordinary. She's like, I was terrible. I was like, you said it better than I did. So anyway, we could then spend time on that. Okay, we're in America, and we're about 5% penetrated, but we're going to go to Mexico, and we're going to go to Brazil, and we're going to go to Spain, and we're going to go here, and actually the number of expats in this country is incredible. So you would have all that time to look at the roadmap, but well done. Let's pass the microphone. Simple showing. Clara?
There are a lot of companies in this space. There was one in your last
Tori.
accelerator batch that was focused on something similar, somehow reducing fees, ultimately like focusing on the transaction. So I would just kind of want to understand what makes you guys special. Also, like there are individual agents in the market who do the agent less, and they'll actually only keep an even smaller percentage than the 50%. So we see it a lot in the Bay Area. So I'd be curious to know how you compete with those folks.
Well, you're right. There are a lot of startups that are similar in terms of offering a lower commission, but no one is putting together a full platform for not only acquiring a showing like we do, but also making an. There's actually only one company that does online offers, and they just got acquired, and they're called Open Listings, who you interviewed on This Week in Startup. The only company that does online offers. So we'll be the second.
Who bought them?
Open Door.
Open Door bought Open Listings.
Yeah, it's kind of weird, but yeah.
What did they sell out of weakness, you think, or you don't know?
What's that?
Did they sell out of weakness, or you're not sure?
No, I think they had some traction. They did it because Open Door is on the selling side, so they're focused on the selling side. Open Listings is focused on the buy side, which is similar to us.
The other big thing that stood out to me is because there are so many companies that say they're going to offer like a lower fee, it's kind of like a race to the bottom. And so understanding a little bit more what your value add is. I mean, for a lot of people, they're buying their first house. They have no idea what's going on. It's very confusing. There's lots of information, and frankly, there's a lot you can get tripped up on. And so understanding how you're going to not just cut fees, but also provide value would be really helpful.
And that's $60K in revenue, right? You put the number up. That represents, so it was great to see the chart. Chart's impressive. You didn't have the number of transactions for that month, so just a power move. If you have the chart, in that histogram, the bar chart, you could put 7 transactions for the 60,000, so or maybe 2 or 3. So you said you give back half the commission, that'd be 5,000. So that probably represents, if that's on average, 11 transactions. Am I right?
The end of the year, we ended on 18 transactions.
The 60K month, was it 11 or 18?
18.
So 18 into 60 is more like $3,000 per traction. But you said you were giving back on average 5.
We also do sell side as well, so 60%.
Hold on a second, but did you hear that piece that I did the math? So what
That's
did
correct,
I get wrong?
yeah. That is those numbers are right. Our buy side ASP is a little over 5,000, and then our sell side ASP is closer to 30,000.
Oh, so you had some things you were selling as well. Got it. Okay. So again, you start doing math, people are going to math. Boom.
Correct me if I'm wrong, because I'm kind of like at an angle, but I didn't see your name and email on the front slide, and it drives me bananas because we get a ton of decks and they're all around our office, and sometimes we're like, we have them on a conference room, and I just need to email this guy. What is his email? What is his name? I don't remember. We meet a lot of people. Truly, the best thing you can ever do is just put your information on the front slide.
Well played. Well played. Okay, now we do the ranking, and Okay. I picked Remitter number 3, Simple Showing number 2, and Tickery number 1. The reason I picked you as number 1 was because a lot of times I'm looking for that founder market fit, and I just get that sense that you're the right person to do this. Like, you actually care deeply about this. I don't know why. I don't know if your mom was in a band or your dad was a flamingo dancer. I don't know what it is. Like, did you own a club or something? But I could just tell when people are pitching how much they care. I'm not saying the other two didn't care, but I do get the sense that you cared the most. And that's super important, because the reason startups die is not they run out of money. It's because the founder gives up. Many times founders run out of money and they keep working at it. And they come back 6 weeks later, like, we're out of money, but if I get these 2 more clients, I am going to be back in business. And I get the update, and I'm just like, I love you. Like, really? Like, I have people who have $150,000 left in the bank account, and they're like, we're closing up shop. We're going to distribute the $150 3 ways between our 3 founders because we took the first year off of pay, and then we're giving our 6 developers their $3,000 MacBook Pros. And I'm like, fuck, what the fuck did you just say? Like, holy shit. Like, why don't you give 15 cents on the dollar back and then sell the laptops and give an extra 2% back so you have some level of credibility with your Have you gotten that email?
Everybody gets that email.
I mean, do you just want to, like, throw your desk over? Or is it just like, well, at least I've eliminated this person from future funding rounds?
It's hard. I do think there's a gender disparity. I see a lot of women who are trying to, usually they're trying to actually return the money to investors. So it's like, we have $150K left. Like, I want to do the right thing. But it's usually like, I wish you would just, you got $150K left. Like, let's see what we can do. And this is a gross generalization, obviously, but I have seen that happen.
You know, it may be a valid, your experience is anecdotal, but very valid. It's like, okay, there's 2 minutes on the clock left, and it's 3rd down. And if you score a touchdown, you win the game. And you're like, yeah, I'm going to just concede. And it's like, but you could throw 2 passes and maybe get a first down or score. So you're giving the money back? Like, lay everybody off, put everybody on furlough, find a developer or job or some consulting gig to keep the lights on if you feel passionate about it, and keep going. Side hustles mean a lot. So what was your ranking?
My first one was Tickery. My second one was Remitter, although I would like to understand more why. And then my last one was Simple Showing.
Great. So we're
on the same page about number 1.
Yeah, and then, you know, sometimes it's a jump ball between the next 2, and I understand why you picked Remitter, because $7 million is a lot. But I thought Simple Showing, I think the time is right for multiple people to try to make this work. Okay, give them a big round of applause. Next 3 victims. Here we go. Tastry, drive sales with singular insights. Katerina, 3, 2, go.
Hi, I'm Katerina, and I'm the founder of Tastry, and we taught a computer how to taste. Tastry decodes and mathematically describes the flavor matrix. And this works for alcoholic beverages, food, and fragrances. We have a world-class team of innovators in AI, analytical chemistry, and flavor chemistry. And our research succeeded where multi-billion-dollar companies have failed, and that's because of something that we invented that we call singularization. And that's in our ability to capture the incredibly crucial latent variables that the data flywheels don't have. First, we chemically analyze products at the Tastry lab, and then we give our clients access through the Tastry Insights dashboard. One of our clients is an alcoholic beverage conglomerate, and we predicted the aggregate consumer score of wines in the U.S. with 91.8% accuracy before they hit the market. We also ran a computational blending exercise where we increased the score of a wine from 3.6 to 3.95 out of 5, which increased its retail value by 207%. Everyone in the supply chain wants Tastry. We have traction with retailers, manufacturers, and distributors. Our beachhead opportunity is with alcoholic beverages, but we are being pursued by international flavor and fragrance companies, which is great because they spend billions of dollars a year on product development. Our other use case was in retail, where we increased wine sales by 5% and margins by 18% just by recommending wine to shoppers. And the shoppers were 45% happier with their purchase. We then provided insights on how to optimize product mix, forecast demand, and increase campaign conversion. We've been in market for 3 months. We're going to be cash positive by end of the year with 95% margin, and we're going to win because we have an amazing business team. Tastery, we taught a computer how to taste.
Okay, very well done. Next up, you can hand the microphone and the thing. Chimney. 3. Chimani, that's what I said. Please never correct me. I have dyslexia. I mispronounce everything. 3, 2, go.
Great. At Chimani, we make travel guides for national park visitors. So let's take a trip to Yosemite. So this is our guide for Yosemite National Park. We produce all the information ourselves and give you everything that you need as part of the experience. Now let's head on the Mist Trail, one of the most popular trails in the park. So as I head up there, I've got a complete selection of all of the trails. But we give all the essential information, which is really important because people need to get that quality information to make sure they're making the right, safe choices when they're going on trails. Now, we also make sure that you know where you're going. So our content works completely offline, and so you're able to navigate using our map and find your exact location throughout the entire process. Now, I'm heading up Mist Trail, and pretty much halfway up, I hit Vernal Falls, beautiful waterfall. I want to be rewarded for that effort. So you can use our Pokemon Go-like check-in function to unlock a special badge, which you can only get by physically being at Vernal Falls. Great. So there are 300 million visits to U.S. national parks each year, which represents over $18 billion being spent within this industry. However, the majority of these people are facing overcrowding, as well as a lack of quality information to figure out exactly what they want to do at the parks when they get there. That's where Chimani comes in. So we develop travel guides for all the national parks for all of these 3 major platforms. To date, we've got 500,000 free users. We launched a subscription service, which has 1,000 paid users. And we have enterprise deals with both Ford as well as Subaru, where we'll be launching on 1 million Subaru vehicles this spring. And we're generating just over $20,000 per month. Thank you.
Well done. Okay, next up. Is Swaggle. 3, 2, go.
Hi, I'm Eric New, co-founder of Swaggle. We have created a marketplace that makes it fun and easy for you to buy and sell menswear from your closet. Just think about how many clothes that you own in your closet you're not wearing. To sell, simply snap photos, give out some details, and we can turn your closet into cash in seconds. To buy, let's say if I'm buying a size 10, a pair of brown loafers under $200 from my favorite brands within 10 miles radius. Swaggle will curate the results so that I will only see things that's relevant to me, swipe left to skip, swipe right to make an offer, and we'll take care of the rest from payment, shipping, to review with a 10% cut. So this is me. The theme of the photo shoot was elegance, and it cost me under $100 for the outfit. And I sold the outfit two days afterwards. So Swaggle, we're not just selling cheap clothes. We're selling confidence and perception by making designer fashion affordable and accessible. We were a group of young professionals who couldn't afford the looks that we wanted. Then we realized that women have been doing consignment shopping for years. How come there's nothing there for men? So what is our traction? We have raised $125,000 so far, including FUBU from the Shark Tank. And we launched our MVP from June to November with over 1,000 users and 1,200 gross revenue. The most difficult thing for a marketplace is to balance the supply-demand. That is why we are raising a $800,000 round so that we can actually acquire inventory, sending people to your homes to have a better control of our revenue. We believe that we can be a market leader in this space because it is growing and we know our male customer better than the competition. Our advisor, Izzy, used to be the CEO of LRG with more than 40 years of experience. He also owns the biggest consignment shop in D.C.
Okay, well done. Big round of applause.
Thank you.
Let's bring everybody up. You can go first, Clara. Tastry, will you take the microphone? Great. All right.
I thought it was super interesting. I wanted to know more and get a little bit more context. You sort of like hinted at, an alcohol conglomerate, a wine company, but they actually seemed, you don't have to provide the name, but a little bit more value earlier on.
Okay.
Also, honestly, a slide with logos without numbers, I'm over it. And it sounds like you have a lot of traction, and so being able to add color to it earlier on would be really, really helpful. Also, you kind of really started with this clear sort of vision of providing B2B services essentially for these large companies, but then you kind of hinted at these consumer products, like helping consumers taste things differently. And it made me wonder, sometimes when we see companies that have a lot of different use cases, it makes us worry that this is more of a tech-enabled consulting type project instead of a tech business with, especially for early stage companies, doing one thing well is usually hard enough as it is. And maybe you are doing multiple things well, but it would be helpful to understand a little bit more specifically, like we have these 2 sales channels, we do it this way, we whatever it might be, just to make it seem more real, because it was really intriguing, and I did have lots of other questions I wanted to ask.
Yeah, mission accomplished on intriguing, like never heard of this before, want to know how it works, want to understand the science behind it. So the 2-minute pitch is, sometimes you might have a 2-sentence pitch in an elevator at a cocktail party where there's a DJ playing, and I don't know why people do that, but people are there to talk, but no DJs at the, sorry to the DJs in the crowd. But customer clarity, Jackie, the presentation yesterday was amazing. I don't know if I mentioned that, but I would like you to add a slide on the customer. Did you cover customers in that incredible deck? I don't think so. So let's make a new slide, so it'll be 12 things, and one of them is clarity on customers or customer clarity around this fact, because people will put the logo slide of customers for people they don't have as customers, people they've had a phone call with, or people they're targeting. So really having super clarity. Here's our pipeline. These are people, this group of people we've identified as our top 20 customers. Of these 20, we have done in-person meetings with 8 of them already. So you like gray out the other 12 and you have the 8. And we close these 3 to pilots. And we have 1 that's gone to a yearly license, right? So it's 20 slides. They're all in color, and then you go gray, 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 so you can like actually show the pipeline. So some best practice around that would be really good. And then adding a slide to your talk about the chart that Ashley does, which is revenue and losses, and just showing that. She'll fill you in on that chart that we do. But I really liked it, and you got to this point of like you're going to be at break even maybe, and you have a 90% margin, all this incredible stuff. And so I would want to drill down on that, like, okay. But yeah, I almost think it's like a perfect pitch. Like, you have 2 minutes. I don't think there was wasted. I'm trying to figure out if there was any wasted moments in it. And that's the thing you can do when you review your pitch, is make a transcript of it, make a video of it, sit with your team, and then take the transcript and cross out lines that don't add value. This is what I do as a writer. When I wrote the book, I had my best friend Brian Alvey, my bestie, just honestly tell me when there were words that weren't adding value, and he would cross them out. But we also had, for adding value, things that were funny or outrageous or interesting or cheeky. So it wasn't like sort of just remove every word, but I think it's a really good thing to do when you're doing presentations and practicing. So
I
really
used Hemingway.
Yeah, right. Like Hemingway is okay. And there's another book, like Writing Compound Sentences, which Hemingway hated, but I actually kind of like. So there's all different schools of thought here, but really efficiency in the pitch was really good. Let's pass the microphone. I pay for a trail app. That's awesome. What's the #1 trail app out there?
AllTrails.
AllTrails. Anybody here have AllTrails on the phone? Raise your hand. Awesome. Wait a second. This makes no sense. There's 15 of you with the AllTrails app and only 6 coming on the hike tomorrow. How many people pay for AllTrails? 1, 2, 3. Okay, so that's super interesting. There were 15 people and 3, so 20% of the people in the room actually pay for it. So I love that product. I pay for it. And I was watching your pitch, and I was just benchmarking against AllTrails the whole time, but you never mentioned it. And so it'd be kind of like talking about a chat for work product and never mentioning Slack, or doing a ticketing one and never mentioning Eventbrite, which we saw just in the last cohort. So, but I did love that you have 1,000 paid people and you're making 23,000 a month. So I believe there can be 2 people in each space. And in fact, when we invested in Calm, a very notable investor told me, you're going to lose your money. Headspace is going to crush them. And I don't know, something happened along the way and they beat Headspace, at least in terms of revenue. Headspace is still a great product, but you know, sometimes there can be a Lyft and an Uber and the investors in both are happy. What are your thoughts?
Yeah, I wanted to know how you were unique. I wanted to know where your content came from. I wanted to know if you guys were internet access dependent. That's the thing that makes me craziest in national parks, especially here in the Bay Area. Those are the big ones. Really, the uniqueness, I think, is speaking to that more explicitly would be helpful.
But you're in our kill zone for the accelerator. Is Demont in the room? Demont, can you make sure you guys talk a little bit? Because if he's at 1,000 paid and 23K a month, that's kind of right before our sweet spot. I think we could probably help him add a 0 to that number.
A real quick response?
No. No. Pass it to Swaggle. Let's get through this first.
Hello.
Thank you. Okay. Feedback on Swaggle.
Again, just why are you unique? Why do men need a different platform? I mean, a lot of these, like RealReal has men's content as well. So just being more explicit, because that's definitely what's going to happen in my head. So you might as well just answer the question.
Okay.
I think, yeah, just speaking more like, why is the male customer different, and what specifically, is it really just exactly like these other platforms, but with the men's picture on the homepage, or like really from a content perspective, what are you offering that's different? Are you pricing it differently? You also mentioned something about sort of local, and I was wondering, you know, is it really like I'm really trading with folks in my neighborhood, or is it I'm sending it off to a warehouse and it could end up in Canada? Just a lot of questions I had.
Good point.
Swaggle, I love your Swaggle. You know, like you just are so into it, and you look incredibly dapper in that photo, if you don't mind me saying so. And the fact that you did it for under $100 is awesome. And it's very early days for you. And sort of like the ticket company, you know, sometimes I think there's a founder who really wants to see something exist in the world. And how many men in here have bought something at a consignment store or a clothing store? It's like 3, 1, 2, 3, 4, 5, 6. Yeah, so it's actually not as rare as I thought. How many women have been to a consignment store or participated in that in any way? So I'm trying to see if there's a woman in the room who hasn't, and there isn't a woman who oh no, there's one, you haven't. How many women haven't been to ever bought a used piece of clothing? Any woman not buy a used piece of clothing? Okay, it's one, great. Trust fund kid. There's one in every crowd. I'm joking. I know you're not a trust.
Can I ask a follow-up question to address her question?
No.
Okay.
But thank you. Okay, did you write down your 1, 2, and 3? I just want to keep the proceedings moving.
Yeah.
Okay, so before you tell yours, I'm going to have the audience vote one time. So your choice is going to be Tastery, Chimani, or Swaggle. Okay, everybody ready? Who votes for Swaggle? Raise your hand if you vote for Swaggle. Okay, vote your hand if you Chimani. Great. And then Tastery. Okay, great. And so what's your 3, 2, 1? Or 1, 2, 3?
My 1 is Tastery, my 2 is Chimani, and my 3 is Swaggle.
And what does that say?
The same thing.
Exactly. Which is exactly to the audiences. So you're getting good at this, right? Like, and I'll say for Tastery, the reason you probably won is because it's so new. And so we're always looking for the new thing in Silicon Valley. But I would put, if I had to rank these by chances of it succeeding, I would have actually done Chimani, then Tastery, then Swaggle, because like nobody knows if it's going to work, but it's new, so it's interesting, like a vertical takeoff or landing plane. But I actually think Chimani has like a very clear path to get to 1 million paid users. It sounds crazy, but like it keeps happening in our portfolio. We see somebody with 1,000 paid users get to 10,000, get to 100,000, then sometimes we see them get to 1 million, because people like to subscribe to stuff, you know, and people like to pay for something that provides value. But most founders are scared. Most humans are scared, I'll say that. Like, really, like, it's in our DNA to be scared. And then I see a lot of founders who are scared. Like, don't be scared to charge. And don't be scared to raise your prices. Calm was $10 one time when I met them. So they charged $10 for the app. Then they made it $10 a month, and sales went up. Because a subscription, people are much more willing to pay $10 for 1 month of a product than $10 for the product for life. Because they don't know if they're going to get value, but in the other case, they know they can cancel. So the fact, and it doesn't make economic sense, right? Like, but because when you buy something for $10, one time, you're inherently canceling in month 2. Like there is no recurring. So well done. Big round of applause. Let's get our next 3 going. All right. All right. Craft Chocolate Marketplace. Okay, I got my winner. I don't need to see the other 2. I know Jackie's winner. People are like, how did you keep Jackie for 5 years? It's very easy. Chocolate. Somebody bought like a $4 chocolate bar, and I was like, how dare you buy a $4 chocolate bar for Emmy Award winner Jackie? So we buy her dandelion chocolate. She'll never leave.
We carry
All right,
them.
you carry them. 3, 2, go.
Hi, my name is Pashmina, and I'm the co-founder of Barn Cocoa. It's a marketplace for premium chocolate. First time I tried craft chocolate, I was like, wow, this is amazing. It tastes great. What makes it so different? Why is it so expensive? And I found out that all the chocolate I'd eaten up to that point was just crap ingredients and bulk variety beans that were flavorless, and that it actually depended on 2.1 million children in child slave labor in Africa, and 70% of the world's chocolate comes from unsustainable and unethical means. So I was like, I need to buy more of this chocolate. Where can I find it? I went all over Denver, couldn't find it, went online, and it had its own host of problems, just really not a good marketplace for chocolate. So I called my co-founder up, and I was like, I think we can do this better. And we are. This is where we're at right now, 2 years into an online store. We've been around for 3. We started as a subscription club, and it's stuck. And then we're doing about 45 in monthly revenue, and this is transactional, not reoccurring. And I think the opportunity is huge. Craft chocolate is growing in double-digit growth. It's going to take over most chocolate as we know it, and we want to realize this opportunity. So this is what we've done so far. We launched our first retail location in December of 2018, so we were only 2 months old physically. But we want to become the largest store online, kind of like wine.com for chocolate. We want to open multiple locations. We want to take over the entire vertical and start doing distribution and corporate sales as well. And by doing all of this, we can impact ethics and sustainability in chocolate. This is our team. It's tiny and mighty, but we're looking for other investors and angels to kind of jump on board and help us realize our vision.
Well done. Big round of applause. Pass the microphone and the clicker. Next up, Unifier. Unifying fire festivals around the world. Unifier.
Exactly.
Too soon? Too soon? Okay, sorry. Sorry. Okay, 3, 2, go.
Does this work? Sorry. So millennials spend more than $600 billion a year annually. And this community craves experiences and craves authenticity. So how does a brand actually engage this audience? We've created a computer vision platform that empowers brands to launch movements. This May, Lime is partnering with us to create a campaign called Bike to Work. The way it works is that you take a selfie with your bike at your workplace and you earn an hour of Lime credit. So they'll create this campaign, blast it on social media and email, and then users will text the word Lime to a short code to sign up. Then they'll text back a selfie of themselves with their bike at work. They'll see a real-time feed of other people checking in via a web link sent, and then they'll get a discount code texted back to them. But how does it go viral? There's a collective goal. If 5,000 people participate, everyone gets 2 hours of Lime credit. And so now you have an incentive to share this campaign with your friends and communities. Here's our pipeline. REI is going to be encouraging their community to get outdoors and learn survival skills. Instacart wants to get their community to bond around food. And Thrive Market wants to help you become more sustainable using your pantry items. This is all made possible with computer vision. Computer vision allows us to verify real-world actions at scale. And this is the focus of my PhD thesis at UC Berkeley. Our traction, we did about 100 pilots last year with nonprofits and brands, and we saw a 50 to 60% action conversion rate, which means that more than half of the people who signed up actually did it with photo and video proof. What's our business model? We are focusing on fast-growing B2C companies, and each brand pays $5,000 per campaign. And so just using a very simple estimate, the U.S. has 3,000 counties. If 200 counties do one campaign a week, that leads to $52 million in revenue.
Okay,
long-term
well
vision,
done. Big round of
very
applause for
wide.
Unifier. Next up, you can pass the microphone and the clicker. Okay. And this will be 12, right, Jackie? We got through 4 groups of 3. Yeah, sure. Did you have to be anywhere? You gotta go?
What time is it?
It's 11:45.
Yeah,
Oh.
so I have to leave at just 12:15.
Perfect. 3, 2, go.
Hello, everybody. I'm Matheus Riolfi. I'm the co-founder and CEO of Tint.ai. We use the power of AI and data to unleash how companies think about the risk of their transactions and their users. So think about, like, you go to Turo, which is a leading car sharing platform. They need to decide in real time if they trust me, if they should let me drive their Porsche, and how much they should charge in insurance. And all they know about me is my photo, is my name, my email, and my phone number. So basically, it's very hard to have this decision. And this is a symptom of a much bigger trend that is happening in the world, that is today a lot of the assets are being consumed through access, not through ownership. So companies like Airbnb, like Uber, and eventually banks and insurance company all have this problem. How can in real time figure out what's the risk of the user? And they don't have the right tools, so they lose a lot of money because of that. That's what we solve. So basically, we provide a platform that gets data from the customer, user, and transaction data. We aggregate that. We build an engine that evaluates like hundreds of different data sources and thousands of attributes about the user to figure out what's the best mix to predict that specific kind of risk. We put that in our machine learning models, and we output a Tint score. So basically, each customer gets their customized score. Think about a customized credit score that is better to predict the losses that are trying to do, let's say, insurance claims. We have proof of concepts with some leading startups here in the Bay Area, including Turo, which was my former employer. And we Rideshare, as one of the companies that is here, is going to use our product as well. And we expect those to become paid contracts soon. Right now, they're doing paid proof of concepts, and we have a lot of traction with vendors. And the reason why we work is like we predict more losses. So when they use Tint, they can identify bigger losses and save hundreds of thousands of dollars by doing so in a large market.
Okay, well done. Big round of applause for Tint. Risk assessment. Real-time risk assessment. Real-time risk assessment. Okay, Bar and Coco. Yeah, Bar and Coco. Why don't you grab the microphone? And Clara, what are your thoughts on this one?
I would say I appreciated the confidence with which you delivered your pitch. It gave me confidence in you. So I would just say you did a good job from that perspective.
Buckets here.
No, it didn't seem like it. So I would say it came across very natural. I would say chocolate is everywhere, and so understanding why people want to buy it online. It was helpful for you to say you want to be at thewine.com. That was like a helpful sort of focusing statement. But just kind of understanding, is this for gifts? Is this consumer? Am I going to have my Nespresso, subscription, and then I'm also going to have a chocolate subscription? Are people looking for discovery, or is it really I just need my whatever dandelion bar once a month? Just understanding a little bit more about consumer habits and what you've learned so far about how people are using your platform would be really helpful.
Yeah, it was a great pitch. Your passion came out, and we learned a lot about child labor and stuff like that. And doing this, I was unaware of that. Although I'm aware of what good chocolate tastes like. And you mentioned this real retail location. I don't know if one of them was a photo of the retail location, but reinventing retail is something that I think investors are fascinated by. And clicks and bricks, I think, is a term that people use to sort of describe this. So I think was a wasted opportunity there to say, here's our store. It's 1,000 square feet. It cost us $2,000 a month in rent, $2,000 a month in staffing, and it is $6,000 last month already. And people come there, and I immediately thought of the retail experience. So Jacques Torres in New York has a real experience when you go there, or Sight Glass Coffee has a real experience where you see them roasting the beans for coffee, or in New York making the chocolate in a big glass box. So I really thought there might be something there in terms of retail experience, and we also heard about millennials want to have experiences and
or if it's
post
not
selfies.
An experience, then why does it exist?
Yeah, we are doing it for the experience. We're going to do brewery takeovers and wine takeovers and do pairing events, and the margins are actually higher on that as well.
Perfect.
And it also creates a brand loyalty. So
yeah, so that's where in the YouTube space they do something called crossovers, where Casey Neistat and iJustine will do something together when the new iPhone comes out, and you get like the best of like peanut butter chocolate crossover, Marvel versus DC Comics, Batman versus Wolverine, whatever. It's cool stuff. And so that could actually print money, and experiences can print money. So lean into that a bunch because if you drop something controversial like retail into the mix, you want to make sure that it falls on the side of not a lifestyle business, but on a customer acquisition strategy. So you can really nail that. We're doing retail. The reason we're doing retail is it breaks even, but it is building brand and building experiences, and it helps us shake loose who are the 10% of society who are addicted to chocolate. So instead of trying to acquire them for $150 on Instagram, which is what it's costing us per subscription box, we get them in the store, and actually we acquire 1 or 2 a day. And so it's actually cheaper than Instagram. That kind of like would even build more confidence. But you were a great speaker. For Unifier, we'll pass the microphone. I had a lot of strong thoughts on this one because I've seen this business many times. 10 years ago, there was a company called Buzz Marketers that was doing covert versions of this. They would send you some sausage. You would grill it up, and you'd be like, Clara, what do you think of the sausage I made at the barbecue? And Clara would be like, that's great, Jason. And then I'd be like, yeah, it's from, Applewood smoked sausages. And she'd be like, yeah. And, it's low cholesterol, too. And 3 for 1 at Safeway. It's like they were literally doing covert marketing, and like the most heinous version of it that they got called out in the New York Times was Sony sent them out, and they would have this couple go out who were actors, and they had like the brand new Sony camera. And they'd be like, oh, can you take our picture? We just got married and we're here on our honeymoon. And people were like, oh my God, that's so great. And like, yeah, here, take a picture with my new Sony VX1000. And the person would be like, oh, okay, I'll take your picture. They take your picture. And like, yeah, oh, did you put it on 4K? Because it does 4K. And they would be selling and you're like, this poor person, like covert marketing. And so you're in the pay per post space. It's considered kind of smarmy, and Google has rules against backlinks, and there's just a lot here that I think that I would need to unpack to see if it's a scalable solution and it's not smarmy, because people getting paid to do it or getting like some kind of grift or whatever, it seems good on paper, but just be careful. Like you have to really execute these things well. And $5,000 per campaign, it's going to be a grind out business. Not sure if VCs will look at this as an at-scale business. If you made a tool for managing photo contests, they would look at it as a SaaS business. I've seen it a million times, like ambassador programs and contest platforms. They've invested in one challenge post, which encourage people to challenge. And then on the other side, I wonder if like you're so good at this and you have some secret sauce, if you should be doing contests for your own products or doing contests that then drive, instead of advertising revenue, actual commerce, like actual buying of products. So I thought it was a pretty good pitch. I have a lot of questions and concerns, but what do you think, Clara?
I was really interested to learn more about your technology. I would say it did sound like you customized a lot for all of the pilots you've been doing, and so $5,000 per campaign seemed really low, especially for the logos that you had up there. As much as Jason, I was teasing you about the fire thing, it did seem a little weird when you first were presenting and you talked about brands and movements and next generation, and it did sound a little fire festival-ish. So it was in my brain for the first few slides, not because of Jason, but I think because of the way the logo looked and the way you were describing it. I also didn't totally understand how consumers were using or accessing your tool. To Jason's point, like, is this sort of stealthily going to appear in my life and I don't even realize that I'm doing it? Or is this really like, something fun that I'm actively pursuing? Like, I want to do the campaign for Lyft because X, Y, or Z. So just understanding, like, is this a separate app for each challenge? Is it one app? Like, I didn't get that, so...
Yeah, there's going to be more questions for you. And VCs hate these kind of sponsorship-based businesses because they look at it as hard to replicate. And what a lot of people are looking for in Silicon Valley in the investment community, based on what they've experienced, is can the next customer buy it without you being involved at all? And can they tell 2 customers about it, and those 2 people can use it without talking to you at all, and it just scales. And can you then have pricing power to raise your prices, et cetera? And I think you're not going to hit it you got to change the name, unfortunately. Like, I think it's like the only possibility. You can't go out with a company with the name Fire. Just like I can't go out with like Theranostics. It just triggers people too much, right? You're just, my space today, you're my space. So, it's going to just trigger people. But how many people have paid, how much revenue did you have in 2018?
Just small amount, $1,000.
No problem. How many people have done campaigns in January? Have you done any yet?
We did a pilot from March to October, so the answer is 0 for January.
Got it.
And we closed things down, and then we did about 3,000 people in that time period.
Got it. And you're going to do this Lime 1 in the spring?
In May.
How did you get Lime as a customer?
Founder hustle.
Got it. Perfect. So I always ask that, like if they have 1 customer or 3 customers, I always ask because usually it's like, I worked at Lime and my friend's the CMO. And it's like, okay, well, we can discount that one. That's a favor bank. And then the 2 other, though, you're like, oh, you got that one through a cold email. Oh, and you got the 3rd one through, they wound up on your Medium post you ran. The one thing I thought you did very deftly and talking about efficiency and presenting, and we're using computer vision to do this, which is where I got my PhD in Berkeley. It was just like this little drop like on the side. She picked up on it. I saw her write it down. I wrote it down. It's like, okay, credibility up. So you can do these like little tiny drops that are like, I'm like, yeah, no, I was talking to Jay-Z about that. Yeah, actually that came up. I was sitting courtside at the Warriors game and I was talking to Draymond at halftime. And
then I barfed.
Yeah, exactly. Hold on, I dropped something.
So
okay, next up, no, we don't want them. We're going to go super efficient here. The idea here is, remember, you're trying to get the second meeting. I think you got it. So here we go. Tint, risk assessment, real-time risk assessment, I guess is what you're doing.
I didn't understand it. I didn't understand what went into the risk scores, what made it different, what's preventing existing insurance companies with way more data than you from underwriting these people more quickly, what went into your evaluation, what do you do with the score when it comes out. So like I was very intrigued with it by this idea. I agree with you. There's so much room to provide new value in this space, but like it was a diagram with some arrows in and some arrows out. And I would have loved to hear more from you. Like we have a thesis that actually these 5 factors really play a role in terms of evaluating someone's ability to not crash a car or whatever it might be. It felt more like an idea of a product as opposed to what sounds like is a real product.
Yeah, I would agree with that. And you're a good presenter. And you started off very strong. You're like, hey, somebody's going to rent this car, somebody's going to rent an Airbnb, but how do you know who they are? And you need to give them an answer right now. And all of a sudden, my mind was like, okay, he's looking at their social media posts to see if this person was doing donuts with a car and using computer vision to know if this person's doing wheelies or something when they rent on the motorcycle. Like, I don't know. And my mind starts wandering, and then I'm waiting and waiting for you to do the reveal of how you actually do risk assessment in real time. And I was like, did you do a background check? Because people are doing background checks for hosts now and other people. And yeah, it just was like and then you throw up a big logo, Jackie, to slide number 12, talking about customers as a superpower. So the 12 things to do before going into an accelerator or preparing for one. That slide was the exact opposite. It was like, here's a shit ton of logos that are somehow involved in what we're doing. And we couldn't tell if they're potential clients. We didn't know if you had revenue. We didn't know if this was in the market. So when people don't make it clear, we assume that it's not real. That's just a default assumption because it's 70% of the time true. 2018 revenue was?
$15,000.
Great. And did you operate for the whole year or just a couple months?
3 months.
Perfect. So that would be where you'd correct me. Well, we were in market for 3 months. So in the 4th quarter, we made $15,000. What do you project 1st quarter revenue will be?
So right now we made 5. We're switching to
okay, stop.
A SaaS model.
So here's the fail, right? You're all thinking like, wow, Jason's life and Clara's life is incredibly difficult. They ask a simple question, they just never get the answer. They got to try 4 times. Like, oh my God, it's maddening. It's like being Columbo, the detective. One more thing there. You said you parked your car outside?
I love Columbo.
Because, my wife, she says I'm a nudge, but, it snowed. And I have a picture of your car from the traffic light. There's no snow on your car. How did you brush the snow off? Do you have a snow brush? Because I have a snow brush, and I love that snow brush. I can lend it to you if you need. Like you're like, no, Columbo. Oh, obviously you don't understand. I was driving fast on the freeway. The snow blew off. It was very slow. You know, I had that same thought. You know, I was like, anyway, watch Columbo if you haven't seen Columbo. It's incredible. So let's try one more time. What's your estimate for Q1 revenue?
$25,000.
Perfect. And here's, I'll just give a point about being able to give estimates. I wrote a blog post about this, like on predicting the future, like make estimates. Anybody can tell you what's possible. Anybody can tell you what's possible. And nobody can predict the future. The art in what we do as investors and founders is assessing what's probable. Okay? Anybody can predict the future, right? And tell you what's probable. Anybody can tell you what's probable. Nobody can predict what's actually going to happen in the future, but you can tell what's probable. And the people who say, we have a goal of, our target is 25K, and we want to double that in the fourth quarter, they just get more credible, because at least they've set a goal. How many of your companies make a plan? So out of 10 companies, how many have a 2018 and a 2019 plan they're executing against, do you think? Out of 10 companies.
Almost none.
Yeah.
Makes me crazy.
It makes me crazy. Yeah, because here's the thing. People who make a plan have a better chance of hitting goals than people who don't. It's one of the things we've been working on with our companies is like, show us your 2-year plan. That doesn't mean like it can't change, but they're like, yeah, I mean, Inside could make $1 million or $3 million this year. Yeah, I guess it's possible. No, Austin, who runs Inside with me, is like, we're going to make this amount of money each quarter. These are our targets. And then we know that salespeople have been hitting this number, so we need this many salespeople to hit that target. And we know that salespeople churn every 6 months, involuntarily or voluntarily. So you have to hire 3 to have 2. You know, and so if we need to have 10 people to hit that $3 million run rate, we need to actually hire 15 and have 5, you know.
But that's what's really helpful to hear from founders. Like, give me your projection and then tell me how you're going to get there, because I want to understand how you think, especially for early stage investing. You're betting on the founders and how they approach problems. And so understanding how you think you're going to get there, even if it is like, and in this quarter, we think we're going to hit 25K, we're switching to a SaaS model. And what we've seen in the first month so far is the following. Like, that is informative.
3, 2, 1 me. Oh, wait, did you write it down?
Oh, yeah, I did.
Write it down. Don't tell me. We'll do the audience. Okay. How many people like Bar and Cocoa? Raise your hand. Okay. Unifier. Okay. And Tint. Great. Okay, so there's your 1, 2, 3. I picked Bar and Cocoa as my number 1. I picked Tint as my number 2. I picked Unifier as my number 3. But it was very close. Both of them I would need to dig more, and we'd want to see your monthly updates for a couple of months. But I've just seen the Unifier thing not work so many times or not hit scale that I had to go with the one that I haven't actually seen work or not, so because there's a little more mystery. What were yours?
Same.
Wow, finally. But it was close, right?
Mm-hmm. Very close.
Very close. All right, let's give him a big round of applause, and we'll do one more. Okay. And the reason we do this 1, 2, and 3 is to make people feel bad about themselves. And so they work harder.
I'm sorry.
What's that?
I started it by accident. I'm sorry.
I know. No, we don't do this to make you feel bad. We do it so that you can benchmark where you are versus the actual marketplace. You're in a marketplace. So you invest in 1 out of 100 people you meet. Well, 3 or 4 or 500 people apply to this Founder University every time. We have 60 come, so each of you represents 5 or 6 people. And then out of these 60, maybe 3 of you will come to the incubator, or maybe even as high as 5. So that winds up being 1% of the people who apply wind up going into the accelerator. You have to understand you're in a marketplace, you're in a competition, and there's winners and losers. Okay, next up, Buzzboard, 3, 2, go.
Hi.
You might want to use the microphone. Let's start over here. You can take that microphone out, yeah?
Hi.
You want to take it out? Yeah, it's easier that way. Okay, right into the microphone. 3, 2, go.
Selling to SMBs is hard, but they spend about $186 billion every year. So what we see is the enterprises who sell to SMBs, they hardly have 28% of their customers, they have URLs against them. Information is very poor. But why is URL so important? URL is the key that unlocks deep data. And here is what a solution looks like for one use case, which is a sales rep. Think about a Hearst selling to marketing and advertising services. They come in, they click on the URL, and look at the kind of information that starts coming in. Growth information. Are they hiring? What kind of advertising are they doing? what's the social, what's the technology, what are they using. There's a ton of information that comes out. Who is the competition for that? The reps become trusted advisors. They get information they can use to become trusted advisors. And so on. There's a ton of information that we configure for each of these guys. And there are recommendations. What should the rep be selling? Based on the products that they sell, the recommendations start coming up. Well, this also goes into the Salesforce. And we've been approved into Lightning data, Salesforce Lightning data as well, where only the 13 folks are in there. We turn data into conversations. We turn data into recommendations, into personalized, hyper-personalized content, and then into conversations. Look at the trends in the industry. CRM adoption is going up. AI is being adopted faster. Personalized is becoming the new normal. And SMBs are adopting the cloud. But look at the findings. The CRM data is very poor. They're dumb. They're empty. We have traction. We have 48 large enterprise customers. All these are real customers with a revenue of $2.3 million in ARR.
All right, well done. Big round of applause. Let's change the microphone, and you can give the next speaker the microphone and the clicker. Thank you. Next up is Trust and Will. Oh, hey, nice to see you again.
Hey, good to see you again. Great to be here, everyone.
Yeah. Thank you, everybody. It's great to be here. Great to be here. All right, everybody. Let's wait for the noon horn going off. You are in San Francisco, and it's noon.
And we'll begin. What's up, everyone? My name is Cody Barb.
Hold on. Oh, I was just going to let the horn go. Because we're taping these episodes. We might use them for a podcast.
Cool.
Did I do the right thing, Charles? Sir Charles?
Sir Charles.
He cares about audio deeply. Somebody has to. All right, I think we're good. 3, 2, go.
What's up, everybody? My name is Cody Barbo, the founder and CEO at Trust and Will. We are modernizing the $170 billion estate planning industry, so you can think of us like TurboTax for estate plans. How many of you have gone through this process of setting up a will or trust before? Just a few of you. For those with the hands down, you're not alone. I was one of you. I was terrified before I got married and started thinking about, do I set up a will? Do I set up life insurance? Joint bank accounts? Half of all American adults don't have an estate plan, and many of those that do often have one that's out of date. Now, I was probably a little ahead of the curve in wanting to set this up. Most people start thinking about this after they have kids or sometimes a large financial event. They buy a home, they have a liquidity event. And one of the things that's unusual about estate planning is that you go to an attorney, they're going to quote you on $2,500 and up for a full-blown estate plan. We really feel that by unbundling the estate plan, we can help people enter this market at different steps in their life. So we start with trust at $399, wills at $69, and a guardian product, a first of its kind for parents at $39, with each of these having a small annual subscription attached to it. We started the company in October 2017 with our first product launching in April, and I've had about 11,000 people sign up for our will. We've lined up partnerships with companies like MassMutual, Policy Genius. We have some big financial service partners we'll be announcing soon. And we went through Techstars as well. And we've raised about $2 million to date. So the coolest thing that we've done in the last year is we actually completed the first electronic will in history. So this is digital signature, digital notary, digital storage of documents. This is the future of estate planning. And for us to beat out legacy online players like LegalZoom to get to this first is a big win for our team. So our product is really straightforward. It takes 15 to 35 minutes, depending on how much information you want to put in. And at the end, you'll get a state-specific document for your estate plan. And we don't just view that documents are the end game for us. It's really just the beginning. As we look at the next year, we're going to be the first company to get into more complex and robust trust offerings. We're going to be building out an attorney portal and finally moving into trust management and trust banking. I can't take all the credit. I have an amazing team in San Diego that's helping us make it happen. And I wanted to thank you so much for your time, and let me know if I can get you on an estate plan.
All right, well done. Let's hand the microphone to Cuddly and the clicker. Great. Okay. 3, 2, go.
Hi, my name is Natalie Scalea, and I'm the CEO of Cuddly. Cuddly is a for-good marketplace for pet parents, rescues, and donors whose collective mission is to bring joy to and through animals. So let me unpack that. So here's our ecosystem. At the center of it all are animals. And so we have 3 participants: pet parents, rescues, and donors. Pet parents simply can buy products. It's like a baby registry, but for animals. And everything that they buy and share, 5% goes back to rescues. Rescues can ask for funds. They can also ask for products through wish lists. And donors come in and they donate or purchase products on behalf of animals. and 100% goes to rescues. Now, in our ecosystem, many parents convert to be donors, and donors who have pets create their Cuddly list for products as well and purchase. So how do we make revenue? We are on a run rate of 2.2 million. We make margin on all products. We have higher margins than the average. Contributions, optional contributions from donors, which is in a form of a tip. Brand partnerships and co-marketing. We do a lot with pet brands, corporate sponsorship, as well as ad network revenue. Currently, we have over 1,200 rescue and shelter partners, 30,000 paying customers, and over 200,000 in our community. This is just kind of what our homepage looks like. To give you a little bit of context, we launched our MVP in late 2017 with 5 registries just to see if it would work. We sold out in 36 hours, and we've been building ever since. At the end of this quarter, we'll have created over 6,000 wish lists with the capacity of 500 per wish list and a sell-through of 35%. We are seeking $2 million in equity seed round. We've raised $2 million to date from family, friends, and angels. All board members are investors. All angels have invested again in some subsequent rounds. So why Cuddly? We have a really, really loyal community who love animals. We're highly driven and passionate team. Multiple streams of revenue, again, higher margins than average, and ability to reach across age groups. Thank you.
Okay, well done. Let's bring Trust and Will and Buzzboard back up. This exact same thing happened yesterday, Jackie. Like the last cohort had like 3 of the strongest customers. No, come back. What's your thought on Buzzboard?
Well, it took you a little bit of time to get to the point, and it seemed like you were rushed at the end. I didn't totally understand how it worked or what problem you were solving. It would have been helpful to start with, you have this type of salesperson. These are the problems they have. This is the information. This is where they would go right now and why it's insufficient. And this is how they're using the platform. Understanding a little bit more about those 48 customers and the 2.3 million was, that was very intriguing and obviously significant, but understanding what exactly they're paying you for and I just had a lot of questions.
Yeah, I think you had an example, this pool company, and so examples matter, right? And the missed opportunity was you didn't play out the scenario, which is why Clara didn't have clarity. You said, oh, here's a pool company, and here's their URL, and now we know what technology stack they're using. Okay, that's an interesting trick. You pull all the snippets from their website. Oh, and we know how many employees they have and how many they entered. Okay, that's an interesting trick. You pulled it from LinkedIn. Like, we've seen this before. It's like Reportive. It's probably a Chrome extension, whatever. Oh, and you can dump it into Salesforce. Great. But you didn't say, now, Jackie, the salesperson who sells small business insurance, realizes that this company has 400 employees in the field who are doing stuff, and that they may or may not have this type of insurance, and they really should have this product because they have 400 employees, and they know from the locations that they have in their locations and their stores that they're in these 4 cities and these 2 states, so they can sell this product because Arizona has a different product than California. So now that I'm unpacking this, okay, it's an insurance salesperson. Now they know that this is operating in 4 different cities, 2 different states, and you can kind of get that rich example. But
the kicker would be then to say, like, and this actual Jackie salesperson works for this company, which is one of our 48 clients who pay us on average X per month to do exactly this.
Yeah, so it's taking this story and making it real. So when you actually make it real, you've now put yourself in the 10% bucket of founders who are doing real stuff in the world, and then 90% who are either nascent and early in their career, or they're playing the game of founder in like a high tourist season for startups, right? And you don't want to be in that bucket of like, you could have any type of chocolate. It's like, no, we have this specific chocolate. We have this specific store, like really get detailed. Let's do Trust and Will. We've met 3 or 4 times. I just love your focus. Pass the microphone. I love your focus. I love the roadmap. So we see a roadmap there, and the roadmap is tied to the funding. That's super credibility building. So all 3 of these are super focused and highly credible businesses. In fact, I think these would have won the first place in some of the other cohorts. What did you think of Trust and Will?
I thought it was really interesting. I've gone through that process before, and it is confusing and annoying. I wonder, though, this question about like the push or pull. To your point, most people don't even think about it, and if they do think about it, it's confusing and stressful, and so they avoid it. And so how do you get people on your platform? How do you activate the other half of the population that doesn't even want to engage? So speaking a little bit more about that. Also, just the legal tech space is really hard, and so kind of acknowledging that and what you are going to be doing that's different would be helpful.
Yeah, we didn't have revenue or prices come up. That would have been interesting. Like, you can go to LegalZoom and download a document for $49. You can go to an attorney and it's $800. You can go to like a Silicon Valley attorney and it's $1,800. We fit right in the middle between these two, places. It's $495, and we've done it over 1,000 times. We've booked over, whatever, 500,000 in revenue. Something to make it more real. But you're just so polished. It's so focused. It makes so much sense that the credibility was just very high, even though you didn't drop, like we have 48 customers with 2.3 million, right? So you can build credibility different ways. Let's pass the microphone to Cuddly. Your thoughts?
I love my dog, so I was very intrigued this moment you started talking. I was a little confused by this idea of like the registry or the wish list. Like, under what circumstances are you creating it? Are you creating it for yourself or for friends and family when they come over to buy stuff for you? Wasn't totally clear on that. And just differentiating yourself from other places to donate. Obviously, there are many, many places, and a lot of dog owners like to donate, at least from my experience, like to donate locally. Like, I want to support the SPCA because it's right down the street, and if my dog gets sick, like, that's where they're going to go. So understanding a little bit more about what is the value of finding donation opportunities online and what you offer, whether it's more information or verification or whatever, it just would have been helpful.
Okay, thank you.
Yeah, you had 2.2 million in revenue, 30,000 paying customers. You had ad network revenue, sponsorship revenue. So I was confused at what is the basic business model here.
It's products.
What type of products?
Pet products.
So I'm buying pet products through Cuddly.
Right.
And it's doing social good for shelters.
For rescues and shelters. So
I buy my dog food from you.
Right.
So you've sold 2.2 million in dog food and toys or whatever. And what's your margin on that? 10%?
Upwards of 40 to 50%.
How's that possible? Is it your own branded dog food?
We work with a lot of vendors from around the world that are exclusive, not exclusive to us necessarily, but just are not on Amazon, for example.
So these are, and do you warehouse and stock those products? You drop ship them from them?
They mainly drop ship. We do have a few branded Cuddly products. We're starting to get into that. That's in the future when we have more funding.
So
I was curious to know more about competitors, just because there are some really big food, like pet vending companies out there, and sort of how you differentiate and how you play in the space. Just speaking a little bit more to the competitive landscape then, if that really is your primary focus.
So most people ask, how are you different from Chewy? And so my answer really is that we have an ecosystem of, we started out in the animal rescue space, and so they've used our platform for fundraising. And when I came on board, I said, okay, well, they also need products. So we're now leveraging our 1,200 rescues and shelters to attain or to acquire users through their adoption processes. So now our partners are saying, okay, you've just adopted an animal, awesome. Here's a Cuddly wish list that you can go home with, and now you can celebrate the adoption of your animal, and subsequently birthdays and
you split the profits from that with the shelter? Is that what happens?
We give back on every purchase.
Got it. Okay. Yeah, so for these social good businesses, we've been talking a lot about them, and we're going to keep seeing them. We're going to keep seeing this like distance between marauding venture capitalists and millennial do-gooders and triple bottom line and social good businesses. Like, you have to explain it a little bit better, I think, because it's got a lot of different mechanics. Yeah. And then one thing I advise is maybe when you're talking to investors is deprecating or de-emphasizing is probably a better word, some of the social good stuff as an A/B test, and just talking about the core business.
Yep.
So we make a ton of money through selling these very unique toys, very unique foods. These are things you can't get on Amazon. These are all the new boutique brands. And the way we acquire customers, we have an incredible hack. We work with the shelters. The shelters put up a wish list. Every time somebody buys something from the wish list, we give 20% of the profits. And so the average order size is 100. And we make 40%, so it's $40, and then we give them $8. This is more than they could get from affiliate. These are better products, and we run a website that features them and their dogs, so we actually have an inventory system. So it's all a clever way to get dog lovers and insert ourselves in this process and acquire customers cheap or whatever. So I thought that's one of the challenges with social good companies is because they're serving 3, 4, 5 different constituents, and the money's moving around in different ways. I find it sometimes gets so convoluted that it gives investors an easy way to say no.
Mm.
They're like, there's just too much going on here. It's hard enough to be focused. Chewy is focused. They're marauding. They're going to outraise you. They're going to outspend you. They're going to outbrand you. And you're trying to not just service a customer, you're also trying to service the shelters or whatever. So you have to really make a really great case for it. What do you think?
So we're a mission-driven fund. We want all of our companies to be solving problems that, to us, are important and matter. But I would say typically we look for companies for whom that work is very much the core business and is not sort of a secondary where there aren't 3, 4, 5 focuses or constituencies, but really it is fundamentally part of the business. And if you're selling something, then you're doing something good. That tends to be how we think about it.
Do these companies have a harder time clearing market?
Mission-driven companies? No, not good ones.
Oh, there's a caveat. No, not good ones. Got it. Okay. On average, do they have a harder time clearing market with, let's say, top-tier VCs?
No.
You don't think there's a biases with the top-tier VCs?
Not if it's a good business. I mean, like,
Got
there
it,
are plenty of shitty businesses out there regardless, so, you know.
Yeah, okay, that's interesting. Yeah. It's going to be a debate for a long time. Let's bring okay, so now we'll do our voting. I have mine. You have yours?
Yeah.
Don't say it yet. I'll have the audience vote. How many people thought Buzzboard was the best of this cohort? Okay. How many people thought Trust and Will? Great. And how many people thought Cuddly? Okay, fantastic. What was your order?
My number 1 was Trust and Will. My number 2 was Buzzboard, and my number 3 was Cuddly. Same.
Cute. Besties. All right, we picked the same. All right, well done. Big round of applause. And now we will do our bake-off. Trust and Will, come on up. Bar and Cocoa, come up. Tastry, come up. Tickery. And Finest. And then who's your wild card?
Just another one we want
Just
in there.
one more wild card you get to pick. One you thought, was a second place one that could have been a first place one. I'll let you pick the wild card. Oh, you don't have to if you don't have one you're super compelled by.
No, you do it.
I will go with Chimani. That's my wild card. Come on up, Chimani. Okay. Now, it gets harder. You're 1, 2, and 3 of this group.
I didn't know that's what I was signing up for.
I
Okay,
know,
hold on.
It's so hard.
Give me a minute.
It's so hard. We make it really hard. Okay. So hard.
So I'll caveat this by saying you were all awesome. And everybody that presented today was awesome. And if you're actively funding, we do about 8 to 10 deals a year. So shoot me an email. We would look at any of the deals that were in this room. So my email is just clara@urbaninnovationfund.com, or you can ask Jackie or Demont. They can connect us. And typically when we look for companies, what we're looking for, if you couldn't tell from some of my feedback, is stuff that's unique. You could be in a crowded space, but we want to understand why you're doing something that's unlike what anybody else is doing. And so with that said, I'll say my 3 favorite. Do you want me just in no particular order? I don't know if I have an order.
Yeah, don't do an order. Just do your top 3.
I'll say my 3 favorite were Tastry, Bar and Cocoa, and Trust and Will.
God, it's so funny. I was in like different order, but I did Tastry, Trust and Will, and Bar and Cocoa. All right, let's give it up for Clara Brenner. And great job, everybody.
For these guys.
Really strong cohort. We did 15 companies, Jackie, is that right? We did. Okay. So 100% chance of rain tomorrow. And 60 mile per hour winds. Perfect. Awesome. Great. So it's going to be beautiful conditions. All right, we have lunch now. And then we reconvene at 1. There's no speaker over lunch. Got it. Okay. Have a great lunch, everybody.